Good morning, good morning, good morning, good morning, everyone. Happy Tuesday, February 3rd. Hope everyone had a great day yesterday and is ready to kick off another opportunity-filled day. We got a jam-packed day ahead of us. We did have a handful of catalysts this morning, especially red folder catalyst, which was the jolts. But the jolt with the government shutdown, we are currently in the government shutdown, has been postponed. So the jolts data is not going to be coming in. So you can see here, there's no jolts data today. We'd have a handful of orange folder catalysts. We'll jump into that shortly. But before we do that, let's take a look at what took place yesterday. Unfortunately, yesterday's intraday chart, I made the adjustments to the updated levels for the next day without taking a screenshot of the intraday chart. So we will just cover the daily chart and keep moving forward. Hopefully, I had a chance to review this. But yesterday, something very interesting did take place. We know yesterday we did not see a 3 down, a 3 up candle, which means we took out the prior day's lows and those highs. And we saw this massive glitch. We talked about the glitch in the matrix. If you see this candle, no explanation, it disappeared today. It dipped all the way into 2002's lows, under $100, around 69, 70 bucks. But just ignore that. But what we did have the previous day was an inside day. So we can see here, make sure the audio is good. Can you guys hear me? Let me know if the audio is good, guys. Thumbs up in the chat if the audio is good. Thumbs up in the chat if the audio is good. Okay, so might have to refresh. Alakim, sometimes it happens. Sound is good, audio is good. Okay. Sometimes when you jump into Google Meets, it doesn't work. You have to jump back in, and that should get it corrected. So this is yesterday's candle. So what we're seeing now is one thing we want to pick up on is whenever we get an inside day, we get that break at that inside day, we typically have a continuation in the direction that we did break. This has been the instance for the past inside day here. We can see an inside day there. We break those lows. We initially come back into it, but we hold for that retrace, reject, continue to slide. Inside day here, same thing. We break those lows, continue to slide. Inside day here, we break those lows, somewhat of a gap down. We come back into those lows, retest that lows, and slide for that entire day, and of course it wicks back up because that 9 EMA is there. Inside day here at that 9 EMA, same thing. We break it the next day, we break above it the next day, continue to push the upside. And inside day yesterday, and then we get that nice push to the upside. So now going into today, we know how close we are to all-time highs. 697.84 is our all-time highs. If we do break above that daily upside breaker today, which we're scheduled to do so at the current moment in pre-market, things can change last minute before things do open up. If we're above that daily upside breaker and we do open up, the first thing that I'm going to pay attention to is that daily upside breaker bounce. So if we can come back into it, show some signs of life, nice little bounce above that into a potential push into ATH. The closer we get into ATH, right, bigger picture, we are hitting some exhaustion. We can't get an impulsive push continued past ATH, but anything as far as expansion into ATH, I'll try to avoid unless it's synchronized buying across the board. If it's something where we break above a level, we get above ATH and we treat ATH as support. After breaking out aggressively, we come back into it and then we revisit it and trade at support. I can jump on that wagon, but going long into ATH without the other indexes doing the same thing, it's going to be very difficult to do that as we're hitting some levels of exhaustion there. So to illustrate this candle a little further, this is what the candle did, guys. So no explanation what this candle is. No explanation, right? Just imagine if that was a mass liquidation event, right? No one paid attention. No one saw it. I had to take a screenshot of it. This was the quarterly time frame, so you can see we dipped all the way into 2002's lows, right? This would be an absolute nightmare. This is like end of the world scenario. SPY getting all the way below $80. All right. But that wick is no longer there. So unfortunately, I don't have the intraday chart. I kind of erased the chart and then did my annotation for the next day, and I want to go back and do it again. So we're going to jump right into some of the other things. We did see some solid performance by the mid-tier names in the semiconductors: MU, AMD, Intel, TXN, ADI. Strong performance there. Lam Research, of course. We did see the financials pick up some speed. Visa, MasterCard, Burke starting to wake up. We can see Goldman Sachs as well. JPM a little bit flat, but the superstar so far has been Walmart. Walmart's been on a tear. Nice push into all-time highs. Costco as well. So all those names related to Walmart. We can pay attention to if they're lagging in that trade. If they still have more upside pushes in left, we can see if there's an opportunity there. We can see Target. Target continues to show strength as well, similar to Walmart. We'll cover those names, but overall, we did see healthy performance across the board. The only names that did pull us back was Nvidia. Sleeping Giant has been sleeping giant for the past since Q3, Q4. A little bit of activity in Q3 in 2025. Q4 fast asleep. Q1 so far only a month and some change into Q1 of 26, but so far Nvidia has been asleep at the wheel, and the rest of the names have been carrying all the weight. Apple up another nice 4.06%. So if you're a day two continuation type of trader, you're looking for names, individual names. If that's your particular style of trading, you're looking for names that already have pre-existing strength. They have pre-existing strength, and you're taking advantage of the momentum. Maybe a nice retest of that high, maybe some nice structural breaks, holds above those levels for a nice continued expansion to the upside. If you're not that type of trader, then those names are basically at a reach, meaning you need to wait for some sort of a pullback. We did see energy pull back slightly as well. ExxonMobil, I believe there's inside down ExxonMobil we need to visit here. Utilities pull back slightly as well, and of course real estate continues to get hammered. As far as the biggest winners are concerned, MU. Anytime MU pulls back, right, the sentiment remains true. Anytime it pulls back, the very next day it makes a nice move to the upside, and then it gaps up the next day. So we're seeing this play on a real time. But MU, unless you have a large account and the position you're initiating on the MU contracts is a small portion of your account, the risk reward is not favorable in my opinion, right? If you have a large account, sure, you can play with it, but even from that standpoint, the risk reward is still not for the amount of capital you're putting down. You can get you can exercise that capital in a different way and get a better offer. But MU continues to push. If you did buy the dip on MU. For a single stock, that's a great pickup. CAT, Intel, TXN, WMT, Walmart, of course, Apple, AMD, GEV, Visa, MasterCard. I did pick up some gold yesterday. For the custodial accounts. So that was a good pickup, and we can see gold pushing back the upside. So whenever you see these pullbacks, guys, I know that we're primarily focused on intraday. I know the primary purpose of our group is to extract profits on the intraday time frame. Right, 1 minute time frame, 5 minute time frame, but we can't lose sight of the long term as well. Right, we have the skill set to be able to take advantage of these bigger picture macro pullbacks. Right, so we always want to be adding as well, but not letting the long term affect our intraday thinking. Right, intraday thinking stays in the intraday basket, long term thinking stays in the long term basket. When you mix those two things up, then that's when it causes some issues. But there are some pullbacks in some areas to take advantage of. We can see Nvidia also pull back, Oracle pull back, ExxonMobil pull back, Inside Candle, Exxon, Tesla pull back, CVX, Microsoft, Meta, T-Mobile, Netflix, and United Health. As far as options flow is concerned, this is primarily dominated by Coinbase. Coinbase puts 18 days out. Bitcoin continues to slide to the downside. The primary level on Bitcoin is going to be that 80K. Can we catch a bit above 80K, continue to accelerate, or do we just fizzle out when we come into that 8K and slide back at those lows? So Bitcoin is on watch for that inverse head and shoulder. We're going to review that just in a second here. And as far as ETFs are concerned, GLD. So surprisingly, we're seeing a lot of hedging coming into GLD. I don't think I've seen this much flow coming into one particular contract, right? For one order, $572 million in 57-day DTEs. This is hedging, right? Hedging. So say if there was some add-ons on GLD, those price add-ons were above 5K, you have to be hedging right now, right? And the hedging, if you don't have protection already, maybe you're looking to get more protection, those are the puts. So these are just basically insurance policies. This is not retail activity. This is just institutional activity. Big time player just hedging that position. If they do want to protect their underlying position in gold, don't want to divest or get out of gold, this is a great way to hedge, and this is just the cost of insurance for them. This is chump change for the big players, guys. This is chump change for the big players, but this is significant amount of capital, even for the big players. 57-day DTEs, we're seeing a lot of puts coming into gold, right? Let's see if that continues to, if the gold continues to slide, if it's a dead cat bounce, if it's a continued push higher, we shall see. I believe gold is now up 10% off of those lows. We're going to review that just in a second. That basically dominates the ETF flow. ETF flow is dominated by gold. For the past, I would say the past 3 to 5 days has been dominated by gold, primarily by the calls. Now some hedging activity, insurance with the puts. As far as fear and greed is concerned, fear and greed, we're still in the greed territory. So we did not dip into that neutral yet, did not dip into that extreme greed. And on schedule, we're looking to it's looking like we're gonna push into ATH today, and we'll see how that plays out. Again, Forex factory, the government is shut down, right? I believe today is day 2 of the shutdown. Poly market, let's see how many days we can potentially be shut down for. What are the odds? Let's take a look at that real quick. So I believe this might be a short shutdown. Okay, so we're about 18%, 5 days. So we can see about another 9% there. So 27%. So 27% chance it's going to last between 5 to 10 days. 27% chance it's going to last between 10 to 5 to 10 days. 18% chance 5 days. So that means this entire week, the likelihood of the government shutdown reopening is not on schedule. So that there's no it's a low probability chance of us reopening this week. So all the government related data releases will probably be on hold, maybe postponed, and maybe they don't even release them like they did last time. So 2 government shutdowns so far with this current administration. We saw what took place last government shutdown. Do you guys recall what took place last government shutdown? Right, we were near all-time highs. Government shuts down, and we just, for a few days, we just take off. All right, who remembers trading with the team during that last government shutdown? Right, so this is when experience kicks in. Doesn't mean the exact same thing has to repeat, not necessarily, but we navigated these conditions before. Right, so that's why it's so important to have that experience. We've navigated these waters before, so we can take advantage. As far as bird's eye view is concerned, first things first, SPY's coming into those all-time highs. Of course, we can see SPY continue to push. Though 50 EMA, 200 EMA did not get compromised. No death cross there. We're coming into that resistance, right? Looking to potentially gap up. We're starting to fade slightly. But that gap up might still be remaining intact. We do have this major resistance we need to address after making that nice push. So, of course, we do have a couple of zones we're going to cover, but we are seeing that all-time high could be made today, possibly, if we continue to push closer to that territory. As far as the Qs are concerned, Qs 630 comes into play once again. 630 was the most important level for a long time. Guess what, guys? That 630 comes back into play. So the first time the Qs got above 630, if you recall, right, they made that parabolic push once they clearly cleared 630. Same thing. Can we clearly clear 630 and continue to accelerate into that 637.01? If not, that's resistance, double top, somewhat of relative equal highs there. The one thing with the Qs, what's interesting to me, is we are directional to the downside. So we took out the weekly lows on the Qs, and we came into that 50% retrace. We're above that 50% retrace. So this is encouraging that the Qs are above that 50% retrace. If they can't hold that 50% retrace for the Qs, we start to fade to the downside. That's not good news for the Qs. So we need the Qs to hold that 50% retrace on the weekly and continue to push and start to stack on top of that engulfing candle we saw on the daily yesterday on the Qs. So nice daily candle on the Qs yesterday and engulf on the Qs. So let's see if the Qs can hold between that 50 MA and that weekly 50% retrace, which is between that 626, 627 territory. See if we can hold that territory and get a nice little bounce into at least that resistance that gives us about a nice little runway. Keep in mind, if the Qs are ripping and roaring, that's going to solidify SPY's case to push higher. That's going to solidify SPY. Even though we're not trading the Qs per se, we need the Qs to be in alignment. If that's going to help the case. Remember, synchronized buying, synchronized selling, SPY being stuck between a rock and a hard place. Rock and a hard place being the Dow's doing one thing and the Qs are doing another thing. So if we need that synchronized buying into all-time highs, it's going to be in our best interest for the Qs to keep this area of support, bounce off that area, and make an attempt at these highs. Okay, and then with the fuel off of that bounce, do we have enough to go from that point to this point, right? So that point to this point. So 2 moves. One move is come back, retest, hold, bounce, gather up enough fuel to come back at that resistance, finally break that resistance. When we get above that resistance convincingly, a 15-minute hourly candle break and hold above it, then we can see a nice push into potential ATH. So keep a close eye on the Qs. Today we do have a nice engulfing candle on the Qs, so that daily upside breaker retest can come into play on the Qs if it does decide to break out. As far as the Dow is concerned, the Dow has been chopping for a long time, and guess what, guys? It continues to chop. So the Dow continues to chop. Despite the chop, the Dow's been making multiple all-time highs, and for some reason, anytime it comes into this territory, major resistance. Between this range, it's a range between the 494, 76, 496 territory. Anytime it comes into that box, it rejects. Rejection, 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 rejection. It doesn't stop it from making all-time highs, right? But it does reject when it gets to that territory. We do have these lows as well. and we do have some lows that look interesting there on the Dow as well. So let's see if the Dow hits resistance and starts to slide. If it starts to slide, can these EMAs hold up, or does it reset all the way back to downside? The likelihood of us pushing all the way down here in one day without a catalyst, very difficult for us to do so, but we want to continue to monitor the Dow. Again, the case we want to build for that continued push into 700 for SPY is synchronized buying. So the Qs need to be moving, and the Dow needs to be moving as well, because there's no catalyst to lift us. For SPY just to make a run and a dash, an expansion move on its own, right? It needs one of these indexes to join it as well. One of the sectors, maybe tech or the financials, or one of the sectors need to start moving as well. So keep a close eye on the Dow. As far as IWM is concerned, IWM came in nicely for that retest on the daily time frame. We discussed that, right? On the daily time frame, comes back at that box, bounces, and now IW is starting to look interesting as well. IW, nice downward compression break, already broke. See if it has some follow through behind it. IW, see if it can hold that 200 EMA, continue to accelerate and continue to push. IW is $4 away from that all-time high, so maybe a few days out from those all-time highs. So from the 4 indexes, the closest one to all-time highs is SPY. Right behind that is the Dow, and right behind that is the Qs, and right behind that is IWM. Next is Bitcoin. Bitcoin did fall off a cliff, right? Broke below that initially that 90K rejection. Let that slide. Nice compression, upward compression. Accumulate. Second leg lower. Take out these lows. We bounce between the 71K, 75K, and this 80K is gonna be critical on Bitcoin. Can we get past that 80K? If not, we're going to probably continue to trade in this territory, or potentially get back into these lows. And if no buyers step in, we can start dropping that 71K territory, right? So keep a close eye on Bitcoin. Bitcoin does look, if I'm trading Bitcoin intraday, or I'm looking at the daily candle on Bitcoin, that hammer candle on Bitcoin does look appealing, right? That does look appealing. So if you zoom out to the daily candle on Bitcoin, you can see a nice little hammer candle on Bitcoin, and that basically needs a break of this double top resistance to push into 80K. Right, so Bitcoin does, if you take a look at Bitcoin's ATR, Bitcoin is a monster. All right, it moves a lot, moves quick, moves rapidly, very, very volatile as it gets. As far as gold is concerned, gold did dip into this key zone here between that 43.83, 44.13. We did get a reclaim of this zone, get above that weekly downside breaker, and now gold is testing this monthly 50% retrace. Monthly 50% retrace test on gold, 200 EMA as well. So this is still in a dead cat bounce zone. So we have not cleared that 50% retrace yet. So that dead cat bounce is not fully ruled out. Right? We haven't fully cleared it. So you see how those two things line up beautifully. For that dead cat bounce to be ruled out, right? We need to continue to accelerate. We need to continue to accelerate and continue to go. All right, and eventually work our way to that 50% retrace to weekly. All right, so that was a nice bounce nonetheless on gold. If you added long-term, tremendous add. If you liked gold 2 weeks ago, right, and you got a nice little dip buy opportunity. If you got off those lows, good. That's great on you. Whether it's long term, whether it's short term, whatever it is, right, it is up. So tremendous job on doing that. We've been waiting for something like this for a long time on the long term. So whenever these drops do take place, right, that's your opportunity. It's there, right. If you liked it up here, why don't you like it down here? Right? You can't all of a sudden dislike it because the sentiment changed, right? Sentiment shifts. But from if you're a pure technician and all the fundamentals are relatively the same, nothing changed in the fundamentals over the past few days, right? This can just be a massive sell-off, massive taking profit, right? Liquidation event. And everyone is talking about the wealth transfer, the largest wealth transfer in history of the planet. All these different things circulating around, all these different headlines. Is this the sign of the wealth transfer? Who knows? We can care less. All we can care about is, you know what? Taking advantage of technically sound setups and names that are strong already. All right, and position ourselves for the long term, taking it at the same time, taking advantage of intraday moves for the short term. All right, so gold, that's going to be critical here. Going to continue to push, accelerate. If it can't, this turns into resistance, starts to slide back to downside. As far as crude is concerned, crude is still trading above that 60 at that 62. Now VIX, okay, VIX. What's going to help us make a case to push into ATH on SPY? Right, of course, we need the indexes to start to move to the upside, right? If they're moving gradually, but they're higher than they were before, and the VIX gets below 16, that's going to open up the door. If this full breakdown is going to open up the door for us to start to slide into those all-time highs, right? If we just respect this 16, bounce off that 16, start basing out, go double bottom, right? and then start pushing back the upside. We might struggle for some time. All right, we might struggle for some time. So let's jump right into the game plan chart, and we'll jump into some tickers. Okay. So again, guys, good morning, good morning, good morning. If you have any chart requests, put your chart requests in the chat. Good morning, Barry. Good morning, Chris. Good morning, Chris. Good morning, Dan. Good morning, Dan A, Dan M, Elian, Elakim, Gary, Ohms, Joe, John, Milo, Kelly, Kevin, Floyd, Najandra, Lynn, Vinod, Yaz. Good morning, good morning, good morning, guys. Review your game plan. Review the things you're looking to take advantage of. What setups? Review your rules. It just takes a couple of minutes. Maybe just say them in your mind a couple of more times. And look to take advantage of the best opportunities. As far as the game plan for today, pretty straightforward game plan. These key zones have been pivotal in helping us navigate this conditions. We did get a nice bounce, expansion. We come back, retest, and continue to accelerate. And now, of course, what am I waiting for? This bounce zone off that 695 can present an opportunity. This zone, right? We slice right through it, retrace, reject. We slice right through it, retest, bounce. Right, so the inverse logic applies until proven otherwise. The closer we get to this 697.55, 699.03, right, the more bearish I become. Right, for us to get, if we get above 699.03, then I can adopt that bullish line of thinking. But it doesn't mean I can't be long here for a short period of time. I can scalp, but I don't want to take that expansion, if that makes sense. I want to take expansion and then pull back a little bit into a key level and then go. All right, so I'll be very, very aware of doing that once we do get into that rejection zone. If not, if we can drop into this territory here, that's a nice little sweet spot. We do have PML for that PML sweep, kind of in the middle of nowhere for PML sweep. If we can dip a little more, that'd be great. If we do come and sweep that PML and no buyer step in, that can open up the door for that PML collapse into this territory. What that does is that opens up the door for us to take that PML retrace reject into that bound zone, or allow it to break down, come into the bound zone, entertain the bounce. So either way, so keep a close eye on that PML, PMH, of course. We have those internal levels brewing as well, but the overall game plan is to try to stick on the edges. If we can stick on the edges, the better we can do. Sticking on the edges requires patience, right? The best setups are tied to these zones, right? Sometimes when I have a hard time, or when I don't perform as well, when I start entertaining the low-hanging fruit setups, that of course we can take advantage of. We can virtually scalp anywhere, but if you want to catch those big moves and your forte is not scalping, your forte is more sitting in a position, allocating risk and letting it play out for a few more minutes, right? These zones are very, very pivotal, but just pair these zones along with something else you traditionally look at as well, right? So again, if you do those two things, these are high probability zones you can look to take advantage of. So I'll look to scalp in this territory. We come into this territory, maybe start utilizing some further dated contracts to really sit back and enjoy that ride as long as it lasts. If it's wrong, it's wrong. You guys know the drill. If it's right, that's also what we want to see. All right, so we're stuck between those two zones here, that rejection and bounce zone. As far as SPY is concerned, we did have a couple of names report earnings. If you have any chart requests, put in the chat, of course. I think we got one chart request. Good morning, good morning, good morning. Good morning, team. Let's keep it green today. Sounds good. I saw that wick, so I wasn't the only one, right? So we documented it, so it's there. Let's take a look at some of the pre-market movers here. We have a couple of minutes. Of course, Palantir, no surprise, earnings. And guess what Palantir was? Okay, Palantir, on that weekly summary video from last week, we talked about how Palantir is right at that 200 EMA, and earnings could be the catalyst that really drives it to push back the upside. 200 EMA, 30% discounted, as well as a support zone, right? So very, very nice technical bounce there with the help of the earnings catalyst on Palantir. AMD up 1%. Micron, Robinhood, okay, starting to base out there. What else is moving and grooving? Walmart, look at Walmart, guys. All right, Walmart is gone, out of here. Apple, flat. Let's see, we're seeing Intel up 3%. Intel upside breaker. Intel a little early to the party, but Intel weekly upside breaker can present a nice little opportunity. So let me throw an alert on this here. Okay, retested that weekly upside breaker. SoFi is starting to catch a nice little bid. See if SoFi can sustain, at least get above that 50% retrace. Disney did report earnings yesterday. Complete collapse on Disney there. Retrace, reject. CRWV moving a little bit there. You can see GLD, nice bounce there. Bitcoin 78. Let's take a look at some individual names, what's moving and grooving in the pre-market. PayPal just can't seem to catch a break. Reports earnings. That last thing you need is a miss on PayPal. A double miss on PayPal, all right, that is disastrous, right? PayPal is just 43. That's a massive drop there, 17%. That's probably outside. If I had to guess, that's a little outside that expected move. PFE down 4%, ACN down 4.2%. This is surprising though. Earnings catalyst, DOCU, TTD, XYZ. This thing continues to drop, fall off a cliff, XYZ. All right, so this is why. Okay, so can someone put in the chat, why is XYZ dumping? All right, XYZ did not report earnings. All right, if you're not aware, there's something called sympathy, or I like to call it proxy. All right, when two stocks that have a similar business model, right, when one reports and one falls off a cliff hard, more than likely, the one that's closest to it in the same industry does the same thing. So this is in sympathy to what PayPal was doing, right? So that's another way you can play earnings as well, instead of taking that individual name. NEM. The one name that did stand out to me was XOM, was inside on the day. Let's see what XOM is doing. Okay, nothing much there. What I mean by inside on the day, of course, you can see it. Nice inside can on the daily on XOM. All right, so XOM, if the energy starts to pull back, XOM below that 138.07, we can see a nice little pull back to the downside, or above that 140.29 for a nice continued push to the upside into that 142. All right, so there's nothing that I love in pre-market. Past few days, we've been coming into the day with some names to watch. We took advantage of Meta. We took advantage of Walmart. We got stopped out on Intel. But today, there's nothing for us to really that I love. So those ideas are not going to come every day. All right, they're not going to come every day because it has to be high probability. All right, it has to be high probability. All right, so we'll focus on the probability and the quality rather than the quantity, aka Walmart. Right, that I could have done a better job. Sometimes when I'm in my intraday brain, sometimes that doesn't work well for me to open those swings like when I'm in that intraday mood, right? When I'm trading. So what I particularly like to do is at the end of the day when I'm done trading, look for those swings. All right, we all have something to work on. That's something I need to constantly improve. But the idea is the idea. If you're a swing trader, that took off already. All right, so we'll get started on YouTube here just in a second. Apparently BlackRock moving trillions right now out of the market to invest internationally. Larry Fink and them boys. Most people don't even know who Larry Fink is. If you don't know who Larry Fink is, go look up Larry Fink. Big player. So we're scheduled to gap up. We were going to gap up above. He's the CEO of BlackRock. We were scheduled to get above that daily upside breaker. Now we're not. So let's get started on YouTube. So review your game plan. What happened yesterday, guys, stays yesterday. What happens today will stay in today. Let's look to take advantage of the best opportunities. Top of the morning, traders, and happy Tuesday, February 3rd, and welcome to the most value-packed live trading show, where we live trade, breakdown charts, cover high-impact events, and talk trader mindset. Hopefully, everyone had a great day yesterday. Is ready to kick off another opportunity-filled day. What happened yesterday stays yesterday. Today, if yesterday was your best day ever, if yesterday was your worst day ever, if yesterday was a break-even day, today is a clean slate, a look to take advantage of the best opportunities, and make sure you are taking trades that coincide with your game plan, that coincide with your strategy. In 2026, especially in February, especially in this time or any time, you shouldn't be just throwing money at the wall and seeing if it sticks. All right, we're open. We're actually going to give up some of that gap up. We're going to gap up nicely above that daily upside breaker. We gave up that gap up here. Now we have the nice little majority of that gap up here. So now we're not direction on the daily. If we get above that 696.93, we'd be direction on the daily. All right, we're just trading slightly above that PML, I should say. PML, not 696. Good morning, guys. 696 PML. Good morning. So again, if we're going to see that push, synchronized. Buying is what we're looking for. Good morning, guys on YouTube. Make sure to like the video. Make sure to subscribe. Good morning, Shiloh, good morning, Mixon. Good morning, Nico. Good morning, good morning, good morning. So first candle right out the bat. So the orb yesterday, I had that engulfing candle above the VWAP, took off. Never looked back. We took advantage of the momentum based off that candle's strength. Now the orb army is in charge now, right? They have to decide if they want to take a trade. In the next few minutes, we're above POC. We're testing POC. We're testing that VWAP here. POC and VWAP test. See if we get above that daily upside breaker. If we can, that opens up a nice runway. Once again, runway into these highs. Until it's proven otherwise, okay, there is nothing for us to do here. We're going to let it kind of shake out. Shake and bake here. The Dow is on fire. Dow continues to go. Probably fueled by the exit. Look at IW, guys. IW at the gate. IW at the gate on fire. All right, IW at the gate. Look at IWM. Look at IWM, guys. All right. Now just let it cool off. Let it cool off. Okay, let it cool off. IW. Massive push on IW there. Trap on SPY. Basically fueled by the Qs. Qs want to go south. IW and the Dow want to go north. We're seeing some conflict here. See if IW can come back at that PMH. If we do start pulling back, that is primarily driven by the Qs. That's 263.37. Keep a close eye on that on IW. We have PML right here. We have that TOG as well. We have officially open. We gapped up. We gapped up. Okay, we have that daily open. We have that daily open right at that 696.21. 696.21. Good morning, good morning, good morning, guys. Make sure to like the video. Let's get the likes up. 20 likes is the goal. 20 likes is the goal, the minimum goal for first shift. We can easily get there, but I'm gonna need everyone's help who's viewing to hit that like button to get there. All right. So a nice trap above this retrace reject above that daily upside breaker. So a lot of strat traders we know use no confluence would get triggered there and get stopped out. If you use confluence, then you should be fine. And that only applies to if you trade the first 2 minutes. If you don't trade the first 2 minutes, you're just in observation mode. Okay? You're just in observation mode. Where's my G50? Where's my G50? Okay, I'll just do it manually. Should be there. Already on a little bit of low sleep today. All right, so hopefully I'm not too impaired from the lack of sleep. So what are you guys looking at? Anyone looking to take the orb? If you are, orb army, 695.84. Remember the game plan that we laid out with that PML? That comes to fruition. That has about 1 minute left. I'll be there for the retrace reject. All right, as we pursue that bounce zone. All right, as we pursue that bounce zone. Orb army, 695.67. 5 minute orb army. Not all orb army. Just a 5 minute orb army. You're on the clock first. All right, so a lot of key levels in this territory. So we have officially, we can say we fill that gap here. Okay, well, I want to let the dust settle a little bit here. The VIX did wick up, now starting to give back some of that wick. A lot of indecision. We're starting to see the IWM pulling in here. IWM pulling in. They just want to go the other way. Let's see. So the orb army, you're on the clock. Okay, that gap fill, that BOG coincides with that level. Let me close the curtains. Or the blinds. Okay. Okay, it looks like we want to go the other way. Nice little TOG, BOG gap fill bounce. Gap fill bounce. A lot of the terminology I use, right, is unique to my system. So if you're not familiar with that terminology, and if you are in a group, just refer to the ebook or just drop your questions. I'll answer any terminology you're not familiar with. Okay. Good morning, good morning, good morning, guys. Good morning, good morning, good morning. Okay, so IW's testing that PMH. IW's testing that PMH. Let's take a look at it. IW. See if we can get back about POC on IW. We can, that'd be great. I'll take that bounce back to the upside on IWM. If we can break above that POC, based off of that bounce off of that PMH, push back the upside. That could be my first idea. All right. All the candles are inside on that orb. If you do trade that orb, they're still inside. The Qs are very close to the downside orb breaker. SPY's getting close there as well. So IW, if that closes below VWAP, I'll divert my attention back to SPY because it's right in the middle. Right, if it's right in the middle of that range, then more than likely I'll have to do a lot of sitting and waiting. So see if we can break above this candle's high on IW. Get back above this candle's high. There might be something there. If it decides to dump, let it dump. All right. Orb Army. The Qs are about to break. Okay, Qs triggered. Qs triggered those lows. Qs triggers those lows. Okay, SPY triggered that low as well. See if there's some follow-through behind it. IW is starting to dump as well. Fell below that PMH. Fell below VWAP. See if we can come back into here for retrace reject. Prior day close 695.41. Very wicky. If you're waiting for that break and close, not yet. If you got that break, that initial break below it, you're probably in. The VIX continues to push. Let me go back to the SPY. I'm looking at the 695 puts here. So you get a hold below here. It has room to 695. No position so far. This nice little push up was nice. If you got an entry right here, you're in a good position. Just manage accordingly. Know where your risk is. IW falling off a cliff as well. This is primarily being driven by the Qs team. The Qs are falling off a cliff, and that's really driving us lower. So as long as the Qs don't wick, IW is about to join the party. There might be something there. Let's see if I can get a nice close. See if we can get a nice close. See if I can get a nice close. How's that 5 looking? So 5 is still looking bearish. Okay, if we get a nice little slide back to the downside, I'll take it back. I'll take the puts. Okay, I'll take the puts right there. PMH being my risk. This is the same game plan we discussed from pre-market. Okay, we talked about that PMH retrace reject. If we fall below it, up 6. I need to break below that BOG. I need to break below that BOG. Continue to push to the downside. If we did take this, manage accordingly. See if we get some follow through on that 5-minute candle. Continue to slide. Looking for double digits here. Go, go, go. Break below the BOG. Go, go, go. Regain enforcement up 8. The wicks are. We need a break below here. This blue line, we need a break below it. So you get some follow through. Average fill is 103. Okay, new 5-minute candle here. Did see 8. I want that box to hold. I want this box to hold. No reclaims back above here. We can stretch it out to that daily open. So no, not enough buying to convert that daily open. If you took profits already, tremendous job. Down 8, down 9, down 10. I'm going to give about 15%, 10-15%. Close back above that PMH. PML, I keep saying PMH. PML and that daily open. In this case, I want the Qs to continue to fall off a cliff. I want the Qs to continue to fall off a cliff. A lot of strength here off that BOG. Okay, on the verge of getting stopped. Okay, I'll cut right there. I'll cut right there. So I did take the puts here, got stopped out. If it falls back below it, I'll re-engage. If it falls back below it, I'll re-engage. But I do want to respect the fact that there's some buyers trying to pile in there. Okay, just shook me out there. Qs are continuing to dump. Qs continue to dump. I want this to hold. Want that to hold. A lot of erratic candles. We're moving about 60 cents per 5-minute candle. To take the puts here. Minus 18%. Right here, stopped out. So what I don't want to see is that continued buying. So if we can break below one more time, okay, break below that BOG, 695, 66, I'll be interested. If it reclaims it, then the idea is invalidated. All right, I did see a little bit of green to kick things off for a quick scale, but I want to see if I can get double digits. So let's see if I can get a nice break back below it. Okay, I'll get back in here. Okay, I'm back in. So second attempt. So same thing. See if we can hold that. If we can't hold it, then I'll get stopped out. Down 6. If we close above that, I'll get stopped out. I don't want that breakout to go and take off. Okay, on the verge again, stop once again. Okay, so you get a nice little slide. Okay, go, go, go. This time, there we go. There we go. 28, 34. Take a majority off right there. 40. There we go. 45. There we go. We need to hold below 695. 51. There we go, guys. There we go. There we go. What a drop. I didn't see that one coming. Needs to hold below it. I'm up 48. That's a good time to TP right there. Okay, I'm going to close out at 48. There we go. What a drop. So it took 2 attempts. All right, 2 attempts to recalibrate. We could have held through it, but again, it violated my risk. Beautiful drop. And it hit target. So as greedy as I want to be. All right. I close the whole position. It hit target already, 695. All right. I can continue to be a little more greedy. But coming into the day, I'm not looking for that much profit. Okay. So made back and now back in the green. If you're still in with those runners, just manage accordingly. All right. If it breaks below 695, that opens up the threshold. And this is the same retrace reject off PML we discussed in pre-market. Okay. And in pre-market, we said if it starts to slide, we want to see a retrace reject into PML from PML, right, team? All right. So this is the PML, guys. Retrace reject from here. Right. There's 2 things we can do. We can take it from there, that retrace reject into this territory, or a continue push higher. All right. So now I'm looking to potentially adopt a push back the upside. All right. That was a nice little drop there. Beautiful, beautiful, beautiful. If you caught that, put money $ sign in the chat. Oh, you caught that, Jason? Beautiful, beautiful, beautiful. That was fun. All right. Those contracts were going berserk. Right, but again, so am I going to get clouded, seeing 40, 50% and disregard that key level there? Absolutely not. Right, gotta take it for what it is. Okay. Gotta take it for what it is. All right. So if it continues to get below 695, all right, we can entertain something else. But some setups, guys, it takes 2 attempts. So is the idea overall right? Yes, the idea is right. In this position, could have taken profit at 8%. Absolutely. But if I see a stop out 18%, 19%, that's a little beyond it. But I'm trying to give it into that daily open without stretching it too far and letting this thing break out. Right? So, invalidated. But the idea is still right. So the way my system works is the only way for me to remain in here is to have a better entry. Okay? I shouldn't be down 20, 30, 40, 50%. Right? Okay, so now a nice little drop. If you caught that, beautiful job. If you're still babysitting runners, see if you can hold below 695.66. Beautiful job, Nick. All right. If you can hold below here, start drawing your NCs. That was a nice drop. So if there's another leg behind it, what are we going to look for, team? All right. What are we going to look for? So put it in the chat. One of these days, I'm just going to start the stream and you guys are going to just say what to look for. Okay? Because we need to all be trained. The whole objective is to make this an educational experience. Let's not discount the fact that we are bouncing off of that buy zone. All right, exactly. Bear flag. All right, a confirmed bear flag. If no bear flag, then we can potentially get no surprise, guys, we're getting a bounce off of this territory. We're getting a bounce off this territory. So if you recall in the pre-market, folks on YouTube, we do have a pre-market stream at 9 o'clock, 20 minutes, the most important 20 minutes of the trading day, right? We said there's going to be two opportunities that open up. Of course, we talked about the expansion. The expansion is one thing. We're not there yet. The two opportunities we discussed is one, you either be in the camp of that retrace reject. If the PML breaks, everything starts to slide. Or two, you be in the camp where you wait for that slide, you welcome the slide, and you take it back to the upside. Both sides got compensated. So in this case, I was this guy. If you were the other guy, you were welcome. If you were a bull, you're welcome into selling into your level. And what's your target? Possibly that PML or possibly that BOG. Okay? So your targets, your initial targets can be here. And then use those runners to see if you get that nice little expansion break. All right, but this territory team, this territory highly contested, a lot of key levels converging there. High traffic. Okay, high traffic. So I'll let us create some separation away from here. Let's see, IWM's taking off as well. IWM's starting to course correct and gone. All right, so IWM, if you were paying attention to that, good job. Okay, SPY 695. First wave retest. 17%, 25%, 30%. Beautiful job done for the day. That's all we need. And Kevin, you've been doing a tremendous job stacking those wins. Right? Stacking those wins and having the conviction to take the trades. All right, so again, these are not financial advice, guys, but if my analysis matches your analysis, okay, read between the lines. Two things can be true, but don't solely take it off of what I'm saying. I'm just a guy on YouTube. Okay, so, but great job on having conviction, Kevin, and consistently building, consistently stacking. Beautiful job. Done 66%. There we go. Off of that bounce, off that pop. So either way, so both of those can be a 30, 40% put. Good. And that was a great TP, guys. If you took that TP right there, this is why the key levels are so important. The key levels are your guiding light for entries, for exits, and for risk. For entries, exits, and risk, everything's predicated off the key levels. Okay? Everything's predicated off those key levels. Beautiful job, Sanjay. If you guys can be done. First 20 minutes of the day, you guys can be done. All right? Yesterday, I did start to trade a little more. Gave back a little bit of profit. All right? Kind of over-traded a little bit, so I'll look to avoid that. All right, to me, 5, 6, anything above 5 trades is not necessary. Okay, if I take 5 shots, if I can't make any of the 5 shots, that's fine. But if I take 5 shots and I get the first 3 shots to fall, or if I get the first 2 shots to fall, right, can be done for the day. But the nature of us traders is to continue to push. We love to push the limit. And if you are pushing the limit, make sure you're doing it with less size. All right, so at least you have some level of protection. Or you can make the argument, hey, George, I'm using the profit that I made to take the trade. Okay, nice little rejection there. Same thing. Same thing, second go around. So I want us to clear this territory before I start getting active. Okay. Beautiful job, guys, on YouTube. Make sure to like the video, make sure to subscribe so you saw it here first. So the importance of having the conviction to re-engage. Right, having the conviction to re-engage. So in this case, what was I protecting? I was protecting this. This takes place to a breakout. And when, say if your inputs and a breakout takes place, all right, those digits are going to be running. If you have not seen it before, right, trust me. If you're in a breakout, say if you're taking puts and all of a sudden price breaks out, it's like you were down 15%, 20%, whatever you're considering closing, all of a sudden it breaks out, it starts skipping numbers. Okay, that's what I was protecting. So that's a toll fee to ride this dump. Okay. At one point I was down 20%, so beautiful. So you're close to down where I was. Maybe your stop is a little wider. So I'm assuming your risk was close above this territory. So maybe you're willing to part ways with 25 to 30, 35%. Right? As long as it's accounted for, it's within your risk, if it's within your risk profile, right? That's fine. The only thing is, as traders, we just can't make it up on the fly. We just can't make up our risk on the fly. All right, but beautiful job, Firefly. Yeah, 15-minute orb army. Look at the 5-minute candles, guys. 15-minute orb army on the clock, of course. So we had that candle there, 19% view up scalp. Good, good, good. You've been crushing the scalps, Jason. So all we need for the view up army to get this break is you need that clear break, of course. Ripple, wave, tsunami theory. All right. Ideally, if the Qs can do the same thing, that'd be great. We are inside on the 5 here. Double inside. All right, sorry about that. Yeah, so that's what you're going to look for. Okay, see if you get a nice little 2-1-2. We have a 2-1-2 forming. We have the IW forming here. Anyone paying attention to any individual names? What's encouraging is if you're looking to take the downside, we know this pattern. All right, the only issue is, I don't want to say issue, but the only thing is, all right, I don't think this leg from pre-market is large enough, but we do see that nice little pattern potentially forming. The VIX can be on the same page. That'd be great. Okay, QQQ falling off a cliff here. Went 2-1-2. The Dow pulling back as well. We're back below VWAP. We're still trading below VWAP. We're still trading under all those levels. I want to clean up the chart here a little bit. Looks a little congested. And we're moving about, okay, VWAP army. Not Orb army. Your time to shine. Orb army, your time to shine. Yep, there's a massive runway right there. All the way back to that 50% retrace. If we can hold that 695, we need everything else to dump as well. I like how the Dow's dumping. So this is the Orb army. Ripple army in first. VIX is popping here. VIX, what a spike on the VIX. So if there's a massive runway between these 2 points, what are the 2 ways to get involved? If you take the break and close, of course. If it's in between, What I want to see is, okay. See if we can get to create that sustained separation away from that level there. The Qs continue to fall. Qs are well below the orb. 15 minute that is. There goes SPY. There goes SPY. Okay. Okay, go, go, go. So our 15-minute orb army, the ones who are patient, are getting compensated now. Congratulations, guys. Good job on being patient, remaining calm, waiting for your opportunity. Make sure you have something to show for it. These candles are very wicky. Okay, very wicky and tricky. We do have this 694 whole number here. Okay, they're very wicky and tricky. And what do we get here? Nice little continued breakdown. So have fun riding that orb train. Orb train to 694 possibly with the help of the Qs. Look at that. That's a nice drop. Look at that. I mean, you gotta love trading, guys. The opportunities are, I mean, there's opportunities for everyone. Okay, there's opportunities for everyone. But what is this fueled off of this rejection up here? We break structure, we slide. So this thing is about to hit that of that 694 in between that target. If we slice right through 694, we have a good chance of going to 50% retrace. Wow, what a drop. If you're in this, beautiful job. All right, manage accordingly. When it's all said and done, make sure you have something to show for it. Okay, when the trade is all said and done, make sure you have something to show for it. See if we get an impulsive push off that 694. If no one steps up, that opens up the door for us to slide into 693.16. So this slide, this test is reserved for the ones who entered here. They're in profit. Maybe took some scaled out a little bit. All right, how we doing, strikers? How we doing, strikers? 45%. Let's go. Let's go, let's go, let's go. Back-to-back 45s. Let's get the likes up on YouTube, guys. Make sure to like the video on YouTube. Make sure to subscribe. Let's get the likes up. It's 40% IWM. Oh, man. We're the strikers for a reason. We strike. When the iron's hot, we strike. All right, strike. Look at that. Someone is about to get compensated nicely. A nice compensation for this morning. Okay, a nice compensation this morning. If you're babysitting runners in the chat, type babysit. We eating today 100%. I bought a single 690 put. In the first 2 minutes, it's up 110%. Beautiful. 110%. Beautiful. Look at that. From 16 cents to 37 cents. All right. In today's world, you can't do anything with $16, guys. What can you do with $16? All right. Outside of leverage a skill and turn it into $37, like Sancho. Even if it's one contract, it doesn't matter. All right. All the other stuff is just vanity. All right, the amount of contracts, all that other stuff, right, is different for trader. Okay. But what matters is the process, the mechanics, the strategy. It's like a vehicle. A vehicle is a vehicle. All right, whether it's a whether it's a 1995 Honda Civic. Right, or a Lamborghini, still a vehicle. Right. Granted, you'll be comfortable in one of them. Right, you'll make you feel better in one of them. Look at this slide, guys. All right, let's just sit back and admire this drop. 20% for Carlos, probably that 694 break down here into this here. So we hit that target already, 694. So this is actually an early entry for us. This was it. Artem, our orb specialist. All right, probably crushing it as well. And it's so awesome to see the people who put in the time, put in the effort, get compensated. All right. That's what I love to see. I love to see people win. People who put themselves in position to win. Who wake up every day, grind, all right, and earn the win. That's what makes me, that's awesome to see. Now that kind of minimizes my FOMO, all right? So helps the FOMO as well. All right, so now if you're babysitting, all right, diamond hands, you want to stay below 693, 693.16. We're getting back that yearly upside breaker. What a sell-off here. Okay, let's just see the degree of the sell-off. Close Forex Factory. Look at the VIX. What did we say this morning? That's why it's so important to pay attention to the game plan, guys. We don't have enough time on YouTube to cover the game plan. All right, the game plan is more important than the strategy. Okay, we have a well-refined, well-oiled machine game plan. So what I told the team is if we're going to look for those all-time highs, we need to get below that 16 and continue to push. What does it do? It goes the opposite way. Okay, let's just check back in. Bitcoin continues to fall. Okay, look at gold. Gold is stable. That's encouraging. Gold is relatively stable in comparison to everything else. All right, SPY is going straight. It's going to go to dash to that yearly upside breaker. 50% retrace on that weekly. And this morning, what do we say again? Right, the importance of we're coming into this resistance. So if I'm going to go long into all-time highs, what do I need to see? I'm not going to take that continuation. Right. So just because something is all-time highs, don't disregard the key zones. So I'll be shocked if we just slice right through this territory with no buyer stepping in. We've been slicing and dicing through this territory, and look at that. So we come into that tap, that rejection zone, slice right through, no signs of life. My goodness. Runway activated, done for the day. Thank you, SA. Absolutely blood, sweat, and tears. All right, if you guys are enjoying the content on YouTube, you're taking the trades, you're finding value, support the channel through the membership, join our community, unlock more resources. All right, this is just a small sample of what we do every single day. Let's go, let's go, let's go, let's go, let's go. Great job, Artem. Arthur on YouTube. Good, good, good. So if you're still in, if the strikers are still in, you guys know this is just runners. Runner, feeding a little bit of the greed. This is a TP here. There's a TP here. Can it smash through 3 TPs with minimal hesitation? No buyer stepping in. Possible, but we're seeing some profit taking. We're seeing some buyer stepping in here as well. So tremendous job. Beautiful, 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 beautiful job. 85%. We got the best team, guys. We got the best collection of traders. It's just awesome to see. And these are not normal gains, okay? These are not normal results. But it's through our community's dedication, hard work, showing up every day, attending the pre-market game plan if you can, sharing ideas. All right, that culture rubs off. The energy rubs off. Okay, we don't have that scarcity mindset. We're not in the business of hoarding. Okay, we're in the business of abundance, sharing. Iron sharpens iron. 100%. We said it the exact. When you typed it, I put in the chat. When you typed it, I said it out loud, simultaneously, Lynn. Close position, 135% done. All right. Nothing like trading. Okay, nothing like trading. Now for the ones who caught that, you have to be disciplined and be done. All right, you're gonna have. You got when it goes to target, that's 1 hit of dopamine. 2 targets, 2 hits of dopamine. 3 targets, 3 hits of dopamine. So now your dopamine levels need to return back to equilibrium. So you're still not fully recovered. All right. So after a big win, you just want to take a break, say, you know what, let me wait the second shift or be done. And close up, lock up, delete the app, and just go do something else. Of course, you can hang out with us as long as you want, but don't click any buttons. Okay, don't click any buttons. Nice retrace, reject off that daily 50% retrace. Okay, so what a dump. Maybe that candle yesterday, that glitch in the matrix candle, okay, was a tell. We're starting to see the VIX kind of fade up at that 17. We did pop a peak above it. If you're wondering where we have a key zone, we have one right here. Don't worry, we got one right there. All right, so see if the buyers get activated. If you're a bull, if you're a textbook trend trader, if you miss this, all right, you just want to see collision back at the wave with flags. All right, one being here. Okay, one being right there. Nice retrace, reject there off that key level. Waves are right there as well. The Qs, guys, if we think SPY's selling off, the Qs just fell off a cliff. The Qs fell off a cliff. And this is all before 10:30. All right. So if you're done for the day, put done. If you're done for the day, put done. I know Firefly is done. 135%. Right. Put done in the chat. And compared my 45% now looks like pennies in compared to this, but you know what? I'll take it. So don't let that lure you in. All right? Don't let it lure you in. That can start to feed into your greed. That can start to feed into the I need more department. Okay? So if you have anything to show for that last drop, whether it was a little early, whether it was here, whether it's there, whether it's there, you did a tremendous job. You did a tremendous job. All right? So live and direct. What a drop. If you're just tuning in, you just missed this massive parabolic drop. If you're a first-time viewer, best thing you can do is tune in every single day at 9:30. Right? As soon as 9:30 rolls around, we go live. We break down high-impact events, talk trader mindset, educational trading, breaking down setups, taking the setups. So you guys go through the motions of what it's like to be trading, right? And it's a different thing, of course, trading alone and talking through it. I'd say there's a pro and a con to doing that. The pro is you become very disciplined, and your strategy and the way you approach the market becomes it goes 10x. Right. The con is you might be a little late to the party, a little early to the party. All right. But for me, I accept both sides. I accept that as the cost. That's a very small cost to get this information out, because the setups are there. Setups will always continue to present opportunity. One of my best days, not going to be greedy. I'm just shy of my weekly goal in the first 2 days. Small trades only the rest of the day. Absolutely, Firefly, beautiful job. Congratulations to you. All right. It's a great way to kick off the month of February. And if you have that mindset, guys, every day, new day, new opportunity. What happened yesterday stays yesterday. What happens today stays in today. Apply that setup shift to shift. Okay, you have some technical ability. You understand the mechanics. The game just becomes between the ears. It's just a matter of now you just stacking days. Stacking days, sticking to the plan. You wake up, it's going to be the end of the year. It's going to be 6 months. We're going to be 6 months deep into the year. Quarter's going to pass. Before you know it, it's 2028. All right. So when you're doing things slow and doing it the right way, to the best of your ability, you're actually going fast. When you're doing things fast and you're doing things recklessly, you're actually moving very, very slow. Right? Because you're just running in circles. So you're not really going anywhere. Right? It doesn't matter how fast you run on a treadmill. You're still stationary. All right? You can run 30 miles an hour on a treadmill. You're still stationary. You're not going anywhere. Okay? As opposed to someone who takes step by step, who literally walks the entire marathon. Right? You go from walking to jogging a little bit, and then, of course, eventually to running. Over time. This birthday week trading is awesome. I have one more trade left, waiting to see what second shift brings. Absolutely. Let's try to make this the best week of the year for you, Lynn. And big birthday shout out to you. Again, if it's your birthday, let us know, right? We'll wish you happy birthday. Keep in mind, guys, there's only so much room on the cake for candles, all right? We're not going to be here forever. There's only so much room for so many candles on the cake, okay? We're not going to be here forever. So make each one count. Make each one count. Make each candle count. Another textbook 4-hour range patience. Beautiful job. Richie, I like that nice little break. That was a trap. You saw how they trapped it up there. You took that with a SPX. Nice retrace reject once again. So there's a lot of weakness in the market. Beautiful job. My wife's birthday is this month as well. So I got a busy schedule. I have the next 6 months is back-to-back birthdays every month for a loved one. right after Christmas, it's like just there's birthdays every month until I believe unless I'm leaving someone out until August, and then it picks back up. All right, so once Thanksgiving rolls around and the damage is done for Christmas, the damage continues into the fall. Let's see if we can get a nice bounce off of the zone. My birthday already passed. It was in January. Same birthday as MLK. Same birthday as MLK. Absolutely Firefly. So see if you get a nice little bounce in this territory. Now, if you're still trading, right? If you like those setups, after you had a massive push, maybe wait until second shift. I'll wait till second shift, let it kind of die down and settle itself. You got to look up MLK's. You have to look up MLK's birthday. Trivia. Done. Good. Let's get the likes up on YouTube, guys. Let's get the likes up. We got 37 people joining us. If you're just jumping in, the market just tanked to the downside. We did discuss potential taking those puts there. Took 2 attempts, stopped out first time, got 40% there. Comes back into that zone. More of our traders loaded up once again here. Orb traders took advantage of here, and then this thing just completely fell off a cliff. And now let's see if buyers start stepping in off that yearly upside breaker, weekly 50% retrace. If you're curious to know where that weekly open is down here. So we're still green on the week, despite the fact that we did drop this aggressively. We're still green on the week, Barely green, but green nonetheless. All right, if you're wondering, hey, are we going to go 3 down, engulfing candle back to downside? Right, that's a possibility. All we need to do is take out that 689.43, fall back below weekly open, fall below daily downside breaker. That's on the table. We are below 50% retrace. I'm gonna take this out, clean up the chart a little bit. All right. So a nice slide to the downside, 50% retrace, fail. Starting to catch a nice little bid here. See, we can start putting some pressure. Start putting some pressure here. Potential push back up. Reclaim 693.18. So there's more than enough time for the bears to take profit. More than enough time. Okay. More than enough time. A lot of bears got paid there. If you were a bull and you happen to be long at one of these levels, today was a test on how well you manage risk. So depending on how well you manage risk, or if you manage risk at all, depends on how you're going to view the next hour of the day. Okay? It's going to really depend. So for instance, if I'm looking to go long here off this key level, for instance, okay? Say I'm looking to go long here. We got a nice break below it. Looks like it's going to reclaim, right? And then show some signs of life and collapses. I should be out. Okay, should be out, right? I won't even say should be. I should say you need to be. All right? The risk management is a lifeline of your trading career. All right? If you understand, the risk management is basically the heartbeat. If you want to stay alive in the game, you have to manage risk. Not be right all the time, manage risk. Okay, let's get the likes up. Make sure to like the video on YouTube. Let's get the likes up. Our goal is 20 likes before 10:30. We will do a giveaway. We're going to run the stream until 11:30, 12. We're looking to stream 2 hours, 2.5 hours on YouTube and do the rest of the stream on our private community. Right? So we've been going for a long time, So there's more than enough data, more than enough information for you to really put the pieces together. Okay, so around 11:30, 12 o'clock, we'll look to wrap up. If you have any questions, put your questions in the chat, and we'll continue in the Google Meets. Google Meets, guys, since the video is so long, right, it takes an entire day to load the recording from a Google Cloud. So the recording from yesterday will be available today, and I'll create a nice little playlist in our Discord for you guys to take advantage of. So it will be probably posted the next day or a couple of days later. So today's recording, right, it's going to take until tomorrow. So the recording was ready by the time we kicked off the show today. So I'll probably share the link or see if I can get it posted in the Discord. My Google One plan, I think I'm not sure how many terabytes of data that I do have. We can just have it on the Google Cloud and you can access it anytime. All right, so that gives you the pre-market game plan. You can go back and review it. I'm going to say it over and over again. That is significantly better than back testing. Right, so if you're not going back and watching the videos at particular times, right, you're not going back and watching game film. Right, this is what we do, guys. This is what we do, so we need to watch film. Just like quarterbacks, right? The greatest quarterbacks, right? They watch film. Why do they watch film? All right, they watch film for tendencies. They watch film to see what areas they can get better. They watch film to see, hey, you know what areas do they make mistakes? How do they correct it? How do they not repeat that mistake? But overall for tendencies. The whole point of the daily recap every morning when we look at the chart, 1 minute chart, is, okay, during this particular week, during the past 3 to 5 days, 2 to 3 days, whatever the count is, right? What's price's tendency with these particular levels? If we can get a good read on the tendencies, right? That's like doing a scouting report. Same thing. We can put ourselves in position to capitalize off of the reaction off that level, right? We can define risk, allocate risk to that level. once all the environmental conditions align. Okay. So question is, $1 million question, is this the bottom? Who's calling the bottom? You don't have to have a trade to say it, but just let me know if you think there's a bottom. Or is this a potential low that's going to potentially lead to another lower low? So we can see we had this series of lower lows, nice little compression. Where is it fueled off of, guys? It's fueled off of here, this key zone. Okay. The main thing is it's a nice bounce, but it needs to get above this territory here. All right. This territory is critical because this is where the market structure shift lies. This is where that daily 50% retrace key level is. A ton of things in that territory. So that is significant. If we can't get above it and we just fail to get above it, continue to reject, okay, we're probably going to head back into lower lows. Okay, we got one vote, not the bottom. We're colliding with the waves here on SPY, you can see. So this is our first wave collision. Where's my, okay, let's see if we get the nice little collision off the waves into those lows. Where's my straight line? Okay, I think here it is. Okay. On my wave riders. Okay, let's get the likes up, guys. Let's get the likes up. We're on the footsteps of hitting 2,800 subs. All right, so help us get there by the end of the day. All right, we can easily get there. All right, so it looks like the waves are starting to crack here. That hourly, let's go over to the hourly real quick. Let's go to the hourly real quick. We're about 7 minutes away. This has to be the longest first shift. Okay. Okay, look at this hourly, guys. So if we see this hourly candle, we go into this overhead resistance. We reject off of it. All right. Sometimes as traders, we can get overly technical. Again, that intellectual stimulation. A lot of these strategies out there, right, is just intellectual stimulation. But a textbook draw of resistance, reclaim to the downside, will get you involved here. A textbook break below pre-market low, if you know what to look for, if you know how to proficiently read candlesticks and assess the environmental conditions, it can put you in position for here. Okay, so nice little breakdown here. All right, you can see that breakdown that took place, right? Structurally, strikers, Qs continue to sell off here. Qs falling off a cliff. IWs did slide, but is relatively stable, and another leg lower. Another one bites the dust. All right, so where are we going to? All right, we sliced right through that level. We sliced right through expected move. We're currently at that 50% retrace on that daily. We could potentially be quickly going to that 690. We could potentially quickly be going to that weekly open. We can come into weekly open. Daily downside breaker. All right. So smart money terminology, think of daily downside breaker similar to the PD array. Okay. Just prior day lows. Very simple. If we can come into here, if we can just hang out here between now and second shift, first shift, all right, we make these local lows in this area, and then we start getting any kind of bounce. All right, any kind of bounce, and then second shift comes around, and then we come to second shift, we sweep those lows, dip into the daily weekly open at 690 territory. All right, you got me. I'll be there for it. Outside of that, I'll let it sort itself out. So 5 minutes away from second shift. Another dead cat bounce possibly. Nice break here. So wave riders, you get that break, continue push, goes all the way to those lows, gets into that target, key level, you're out. Keep in mind, you're scalping. Okay, good luck, stay green, absolutely. MLK's Martin Luther King. Martin Luther King. Enter puts at 6:50 a.m. Took profits, added back several times along the way. Held last of my runners almost all the way to 20-day EMA. Trade max profit up 2,700 in February, done for the day. Beautiful, beautiful job. And I love how you add to your position, add to your winners hero. Right, it's just tremendous trading by our team, guys, and we have different kind of traders, same objective. All right, different styles are welcome. Okay, so we'll highlight some of our members shortly here. At 10:30, I'll play a short video on YouTube that goes over some of the features of our private community. We'll talk more trades. We'll identify more opportunities. Now, if you're green, what's going to be tested is your discipline. If you say you're done, be done. A potential inverse head and shoulder out of here, possibly. All right, so left shoulder head. Light shoulder. I'm not sure if JB's in the chat. Unicorn possibly forming as well. You can't beat trading, guys. You cannot beat trading. It hasn't even been an hour. Right, and everyday people are making hundreds of thousands of dollars under an hour. All they need is this. Are you going to get this move every single day? No. If you know how to trade this move, you have that in your bag. Now what you need to know is what to do on days when this is not available. A, don't trade. B, learn some other setups. Yeah, the unicorn. We got that sweep of that low. We got those that breaker up there. I'm done for today. Okay, green. Great job mixing. I'll put up a poll real quick. Short poll, first time. Or long. Let's get the we're coming up on our first year. I think our first year is April. So I still know who joined the OG subscribers. Now the ones who joined in December, November, they become OG as well. But for the ones that been here since April, March, April, May, June. I don't even think anyone's from here from March. April, May, and June. Right? How has your trading been during those months, right? Have you seen improvement? So I would like to get some feedback on how you're navigating. And looks like a lot of you are making tremendous strides, and it's so awesome to see. Okay, there's a direct correlation between the effort you put, the time you put, the dedication you put, and the result, right? And of course, you just have to know how to properly execute the trades and manage everything between. But there is a correlation if it's done the right way. The issue is most traders in the beginning, you're putting in a lot of time, but you're spinning in circles. There's so many things. The learning curve is so high, it's so steep. Not everybody gets over it. But once you get above that initial learning curve, right, there's another learning curve, but it's not as steep. right? That one is more between the ears. That's psychology. All right, so hopefully you guys are making tremendous strides to your goals. That's the whole point, guys. That's the whole point. Okay, see, we're in second shift now. First shift's lows down here. Let's see if we can sweep those lows if we can. Dip into that weekly open. I can entertain that nice little push back up. Looks like we might even go between. We might even go between here. But I need the sweep of that weekly low unless we get some sort of divergence between the Qs and SPY. If there's no divergence, there's nothing there. Getting better, actually feeling like I'm working on myself as well as trading. Awesome to hear, Thesis. Making good friends. And trading can be fun, right? The right kind of fun. It can be enjoyable. It doesn't have to be miserable and volatile. In the beginning, of course, but if you have the right collection of people around you, right mindset, right, it becomes very enjoyable. All right, you don't want to do something for the rest of your life that makes you miserable. All right, the whole point is to enjoy it, but there's so much learning, so much pain that comes with it initially that it's hard to enjoy. All right, so at that point, you're not really enjoying it. You have to learn to embrace it. You have to learn to embrace that you're learning, that you're going through these motions. And then when you, again, that initial steep learning curve, when you get over that, and you're settled in, right? You have a good idea of your trading identity. Okay, you're getting closer to managing risk well, taking profits, the setups you like. You're in a thriving, dedicated community of other traders. It becomes enjoyable. All right, it becomes enjoyable. It doesn't mean the challenges disappear and everything is Skittles and rainbows, but it's very, very enjoyable and very, very rewarding as well. So two things. All you have to do again is cap the downside. Easier said than done, but just cap the downside. That's a good one, a thesis. I might have to steal that one. Bearable. Unbearable. So unbelievable and unbearable. Or bearable and unbelievable. My training, especially my patience, has improved tremendously. Have there been setbacks? Yes, but they were self-inflicted. I didn't follow my rules. Overtraining, but overall, the knowledge I gained about myself and trading is inevitable. I'm on the cusp of something special. Absolutely, that's what we're here for, guys. We can't wait to see it, and hopefully you stick around when you get to that point in your journey. All right, and just seeing people grow, evolve. That's what we do it for. So again, maybe inverse in the shoulder out of here. What I would like to see is a sweep of those lows. First shift's lows. Let's see what the Qs are doing. Let's see what the Qs are doing. Knowledge is knowing the fundamental knowledge is fun. And if you're a person who likes to learn something every day and likes challenges, I mean, this is the right endeavor for you. All right, there are some people that just can't, like, my personality is perfect for trading because I'm always seeking information, trying to learn. If I'm not learning, I feel very uncomfortable, right? Some people just like to know one thing and just stick to it. Some people like to always do something different, look for something different every day. And the market, you never know what it gives you. It's like a puzzle. Every day is like a puzzle. You put the pieces of the puzzle together. That's basically the game plan in the morning. We use that to try to put the pieces together. And then the bell rings. We try to solve it. Is the music too loud on YouTube? I noticed that that's there. Let me turn that music down. That's the music from the prep stream. Again, guys, make sure to like the video. Make sure to subscribe. If you're just joining us, the market fell off a cliff. SPY fell off a cliff, sold off intraday. Let's highlight some of our team members. Okay, you can see real people. 2,700 within the first hour. What else? 333, 77 puts, 160, 160%, 85% runners, 20% there, 110%, 5 out the money puts, flip 16 to 37 and some, 110%, 21%, 40% IWM, 45%, 19% VWAP scalp, 20%, 22%. That was the initial drop. 66%. Okay. 29%. So from the opening bell, that first hour, you guys were very active and absolutely crushed it. Okay, locked in, engaged, and crushed it. The VIX continues to push here. The Qs and SPY just fell off a cliff. So if you're looking for hourly reversal, see if you can get a nice little hammer off those lows. The Dow's trying to push. The Dow is in that rejection zone near those all-time highs. If we take a look at the Dow here, all right, multiple rejections in that territory, clear as day. IW, sneaky move to the upside on IW, did break, continues to push despite the push back to downside. So is IW going to be the one that starts to run? Is IW going to be the one that starts to run? IWM, that is, small caps. Okay, looks like we're going inverse head and shoulder, left head, right. See what the Qs are doing. Qs, similar formation. SPY, the waves are still waving to the downside. Take this off. Did you guys get the idea? If you took that inverse off that weekly 50% retrace, manage accordingly. Still might be a little early, but sometimes if you're early, you get rewarded. I want to see a sweep with these lows. That's what I'm waiting for. I'll be patient here. If we don't sweep these lows, okay, one thing to look out for is this continued momentum. With this continued momentum off that break, if we do have enough strength, I want to see a break. Get a break above it. Spend some time above it. And then I'll be there for that retest. All right, into 695. All right, so it's either take advantage of the low, sweep, or we have enough momentum to start pushing back the upside, and we start to get multiple signs, indications that we're going the other way. Okay, if those things can be true, I have two ways to capitalize off of it. Okay, so in between, I'll look to stay clean. I want to make sure that a majority of the sellers are no longer there. We are at that expected move, that expected downside move. We're already there. We're bouncing out that 50% retrace on that weekly. We're inside on the week. Don't forget that. Inside on the week. If you're looking for that 15, you're going to see a nice inside candle on the 15. So the next 4 minutes of a new 15-minute candle coming. A new 15-minute candle coming as it emerges. We need to break above that 15-minute candle's high. that becomes the high for that hammer continue push. Right? So that's still an early reversal on the 15. Okay, that's still relatively early to the party. Let's see what everyone else is doing, what the other tickers are doing. That's SPY, the NEM. Let's take a look. Individual names. So GLD, look at that. GLD. GLDM minis, GLD. Bitcoin. ETH. Okay, let's go to individual names. AMD down. AMD fell off a cliff. Couldn't hold. MU fell off a cliff. See if MU can come into this territory here. Nice bounce off that weekly 50% retrace. Robinhood down another 1.6%. Tesla up 1.2. Nvidia down 3. My goodness, Nvidia. Okay, Nvidia is actually coming into this very interesting territory. Prior resistance, break, come back and test it. 180 does look interesting on Nvidia. Look at Nvidia end of day. All right, keep a close eye on Nvidia end of day. All right, just when the name is beaten up and no one has hope in it anymore, they completely give up. Right, no one wants to talk about it anymore. And it's at a technical level where it can bounce. That's when I'm interested. All right. Google coming back and testing that weekly 50%, a weekly upside breaker. Broadcom down 4%. So semis getting slammed today. Semis are getting slammed. All right. Semis are getting slammed here. Amazon, look at that. JPM up 2%. Interesting. Meta down 1.4. Another leg to the downside on Meta. Netflix down 1.8. Walmart up 2. This is the one that got away. All right. If you did catch it, it was on the radar. But this is what it would like. This is what's beautiful. All right. Apple relatively flat, holding its own. Intel still up 2%, enjoying that gap up. Starbucks up 2%. Uber, good night. Right. Uber is below 80. Microsoft is a big disappointment. I mean, this thing needs earnings. I mean, Microsoft is directional on the monthly to the downside. All right, Microsoft needs earnings to rescue it. ExxonMobil, nice continuation. Look, ExxonMobil. You see ExxonMobil, guys? Inside day, we break it. Let's see what's moving out of the total watch list. PayPal. That dump on PayPal, the dump on the market didn't help PayPal's case. So PayPal did report earnings, double miss. We dump. That further extends the dump on PayPal. PayPal yesterday, all right, it was in the 50s. Now it's low 40s, looking to crack that 40. If we can get below 40 on PayPal, that's a significant. Team Snow, ServiceNow, nice little break. ServiceNow did do a stock split. Let's see, Nutanix out of here, Snapchat, Adobe, Duolingo, DLTR is one I want to bring to your attention. DLTR. Okay, it's gone. All right, so DLTR. So now the fact that consumer staples are starting to go, look for consumer staple names that have not went yet. So DLTR is the one I want to discuss. It already went. DLTR. Another one is TGT. TGT. If you look at TGT's chart, it looks very similar to Walmart's chart. Cost. Okay, Cost is also out of here. BJ is also out of here. So you're seeing these retailers, all right, they're up big time. Another leg lower on SPY. Another leg lower on SPY. So I don't want to be Mr. Show up early to the party. I do have the key level here, 690, 689.58. I would love it to get into that territory. Still some selling there. Okay, the Qs. we're seeing some divergence between the Qs and SPY. SPY took out those lows. The Qs are on the verge of taking out those lows. So they can crack here. Crack that support. So SPY catches a bid, the Qs will probably start bouncing as well. If SPY continues to slide and starts leading the Qs, remember the Qs were the leader. Okay? To the downside. The Qs were sliding to the downside first. Before SPY. So SPY is close to making those lower lows. Let's see if you can make the low of the day here. I watched a video you spoke about gold and said there's a big divergence on. I watched divergence on paper gold and real gold. They're saying paper gold is going to struggle, and one herd of this is the theory, and one herd of this, or is this a theory? Yeah, the thing with gold, right? The gold, if you're trading gold, is very similar to real estate, right? There's a lot of, it's a physical thing. So there's a lot of things in between, right? Storage of the gold, transfer of the gold. It's not, of course, the stock is easy to liquidate, but the underlying itself is not easy to liquidate. Right? When you're trading stocks, right, it's paper money. It's just pieces of a company. Right? Imaginary pieces of a company. Right? When you're trading gold, you're actually trading a commodity. So it's like if I have 10 gold bars, all right? If I try to liquidate those 10 gold bars, it's not going to be as easy for me to liquidate those 10 gold bars, to access those 10 gold bars, to transport those 10 gold bars or whatever the quantity is. So it's different than a stock. And that's where the argument for Bitcoin comes in. Right, so the physical gold and the paper gold is a real thing. And the miners are taking off as well. Okay, see if we can start to push here. Nice little double bottom there. See if we get that continued push. See if we get that continued push. Qs are starting to bounce. All right, so from my perspective, I'd rather have the gold ETF, all right, with the paper gold. The gold ETF is tied to actual gold, though, right? The gold ETF, I'd rather have the gold ETF than have a bunch of gold bars, right? Why? Because for me to liquidate the gold bars, it's not going to be as easy. It's a safety concern. You have to put it somewhere safe. You have to store it. And if you try to sell the gold, you might not get the exact price. There isn't an official, there is a spot price, but the spot price can be different. The bid and ask can be a little wider if you're trading it on a smaller scale. Technically, you can go to a jeweler and say if you have a bar of gold that you bought from Costco from a few years ago, right? It was about like $2,500, $2,700. Those gold bars from Costco. If you take that to a jeweler, right, so you want to liquidate it as quickly as possible, right? They know what the spot price of gold is, but they're probably not going to give you the spot price of gold. You're probably going to sell it, right? And you're going to lose some difference on the bid and ask. There's going to be a spread. So therefore, the paper gold or the ETFs, right, are easier to liquidate. Okay, we're coming to those highs. So they're easier to liquidate, enter a position, exit a position, because there's nothing for you to do. And the market is already there. We're starting to see a nice little bounce on, more than a nice little bounce on SPY, on the dump on the Qs. Now see if we can get above this territory. So we got a nice move. Remember the two ways to take advantage of this. One was a sweep. Sweep didn't come into play. Now see if we can get above that level and start to push. See if we can get above that level and start to push. Let me know if that answers your question. Yeah, you can hold both, right? You can hold both. 40%. Beautiful job, Carlos. But if you have a significant amount of gold, you're going to have to pay for storage. All right? Maybe you're safe. You're safe at home is not safe. All right? Maybe safety deposit box. A larger safety deposit box. You have to store it somewhere. And you have to insure it as well. We probably have to insure it as well. As opposed to the ETF, you have the paper, you own it on paper. You're not carrying around gold bars. If you want to liquidate it the same day, you can. There's bars on the other side. The spreads can fluctuate depending on the volatility. But overall, it's very easy to liquidate paper gold. So we came to that territory. What I want to see in this case is I want to see this push is enough to get us above it. So this is resistance. We got to respect it. All right. So if you took that the upside, that's your target. That is your target. That is your target. VWAP is at that 693.74. 693.74 on SPY. We got an engulfer on the 15. Engulfer on the 15. If we do, I want us to hold enforcement. Should be an engulfing candle here. Okay. First shift lows. First shift lows are down there. So we came into that resistance up here. Daily 50% retrace, 693. Nice rejection. We get pushed back to 692. Is this like a break and retest of the 692? 692 here after breaking. We did go engulfing on the 5. The Dow's at VWAP. Dow's at VWAP. The IW is back above the orb. IW is back above the orb. So it looks like a nice little break, come back, retest. Now do we have enough fuel to break it? Now we could have took the bounce into that overhead resistance. VWAP is slightly above. VWAP traders be on watch. 693.71. 693.71. Nice bounce there off the 692. SPY continues, VIX continues to dump. VIX continues to dump. Make sure to like the video on YouTube, guys. Make sure to subscribe. If you're a first-time viewer, let us know you're joining from. Long-time viewers, take the next steps. Join our community. Here's a quick video that highlights all the features of our SPY Strikers community.
Tired of wasting hours staring at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why the SPY Strikers Trading Mentorship Discord community was created. Here, you can trade just one ticker for 1 hour and make strides towards consistent results. Join the SPY Strikers community and get daily live trading, clear pre-market game plans with key levels and high probability buy and sell zones, over 4 hours of delay-free, ad-free live trading and training, plus high win rate trade alerts, automated technicals that simplify charts, and full access to my strategies and indicators. This isn't a signal service. It's a community focused on process over profits, giving you all the resources, guidance, and training to help you succeed. You'll also get a full watch list, 1,500 plus hours of live trading videos, courses, an educational library, ebooks, and dedicated support. Stop guessing. Start trading with confidence. Become a SPY striker today, and take your trading to the next.
Okay, we're back. If you're interested in joining the community, take the next step, take advantage of the promo. All the February trial offers are available. All the links are in the description. QR code is on the side of the screen. So the promo is first come, first serve. Or the trial promo is first come, first serve. So take advantage, secure your spot, access all the resources, and become one of our members. All right? If you want to support the channel on YouTube, you can do that as well. YouTube memberships are available. Your membership comes with access to 50 plus videos. We continue to add to that library. And I do appreciate all the YouTube members that are continuing to support the channel. Now, can we get a continued push higher above these highs? 100%. Slow grind equals further dated contracts. All right. They're eating the 0 DTEs for lunch. All right. They're eating the 0 DTEs for lunch. To give you some context, the 695s, if you're using that strike, is about 150. The 1 DTEs. Okay, that 15 minutes starting to go. 15 minutes starting to go on SPY. We're reversing already. We are already reversing. We got above those highs. The breaker was right here. The breaker was right there. See if we can find some cheap contracts. The 697s that would lead us all the way back up here. Those are under $100. Well, first we need to clear this resistance. Waves are waving on the 1. Clear resistance, and let's see how we interact with VWAP. Do we want to play nice with VWAP, or do they run one more peekaboo above VWAP? Peek above VWAP, trap, drop. On the 5, we are in the jaws of that 5-minute waves, wave 1 and 2. This rejection can present opportunities to the downside. All right, let's see. Let's see if the VIX can start to bounce. See if the Qs can start to fade as well. What can help this case is the continued drop. Continued drop. Okay, continued drop on the Dow. All right. ATR did expand and now starting to recoil slightly. See if you can peek into VWAP and go shooter. VWAP is slightly above these highs. So let's see if it's a nice little peekaboo situation. The hourly starting to shape up. Nice hammer on the hourly. We have 6 seconds left. 6 seconds left on the hourly. The VIX continues to dump. The Qs have room to VWAP. SPY has room to VWAP. New 5-minute candle here. So no close below here. 692.79. If we get below there, we can start to see a nice little slide into 692.46. Okay. Slow down. So inside on the 5 across the board. Inside on the 5 across the board. Looking at the 692 puts here, we continue to slide. See, he wants to reset back at those levels. Risk being 50% retrace. Treating resistance as resistance. But I need a clear break. I need the Qs to be on board as well. See if they can go directional. 692.77. 692.77 is going to be critical. Take this off. So until this becomes proven otherwise, I'm going to treat this as, I'm going to view it through the lens of resistance. Need the Qs to start dropping as well. We're inside on the 5. There's about 3 minutes left on that inside candle. Inside on the 1 as well. Inside on the 5 on SPY and the Qs. The Dow is, the IW is directional to the downside. So if you're waiting for VWAP, continue to wait. 693.58 is VWAP. 693.58 is VWAP. See if you get a break up below 692.77. Like how the VIX is starting to bounce here. Need that bounce to be sustained. All right. Want that inside candle to break or get close to it. If the Q's inside candle can break, that'd be encouraging. If it just stays inside, right, we can wait until it gets decided. All right. Just remaining patient here. Okay, I like how the Q's are dumping here. Take the puts right there. I'm in the puts. Okay, up 8, 6, go, go, go. Get that continue push. I'm a little further here using less size. Okay, nice. Up 13, 15, 19. Take a majority off right there at 19. Still up 17. See if they continue push lower. I like how the Q's broke. Go, go, go. Up 17. Okay, let's see if this thing wants to ride out. No close back above 697.77. TP where you need to if you took this. See if that 5 minute can continue to dump. At least until POC 692.40. TP at 19 already. Again, TP where you need to. This has room to POC 692.40. So you got a nice little drop, continue drop, candle under candle. Up 21. Close out right there at 21. Thank you very much. Thank you very much. I don't want to see a nice POC pop right there, so I just shorted that for a nice little 21% drop. Okay, further dated, less size. If you're still in that, manage accordingly. TP where you need to. Okay. If it falls below POC, that's going to be encouraging. And you don't take that. Oh, man. We're getting some good reads, guys. We're getting some good reads. Look out for that POC pop. So knowing that there's resistance coming into it, right? I want to take it long, but there's resistance until proven otherwise. Environmental conditions align. Qs fall off a cliff. SPY joins the party. VIX spiking. Take it to POC. All right. Look out for that POC pop. Oh, you can't see the position on YouTube. So I put the position up on our Discord on the Google Meets. You can see it right here, as well as on YouTube. I didn't have the YouTube one on. Okay. Okay, nice little pop into POC. Okay, so I know POC is there. Right, so I don't need to catch the whole thing. I know we bounced here previously, so this is just from here to here while I wait for an expansion. All right. While I wait for a break above it. If it does, I'm going to entertain what's in front of me. Okay. So if we do break above these highs, all right, then we officially become direction on the hourly. In the meantime, we can take advantage of something internal to the structure as we're inside on the hourly. Okay. Definitely have to add it 100. Can you see it now? You should be able to see it now. So both ideas worked out beautifully. First one got stopped out. Eventually got a 40% opportunity. This don't have anything to show for it. You guys did most of the heavy lifting here. But it was based off of that retrace reject in this territory that fueled it to the downside. If you go back and rewind, we discussed the importance of waiting for a nice a flag. You guys look for the flag. You found the flag, and you capitalized. Is it not showing up properly? Let me see. What is it showing? Give me 1 second. Okay, let's see. I'll try to fix it here. Give me 1 second. For some reason, it got cut off. There we go. Okay, don't mind me moving things around on YouTube. There we go. Should be good now. Okay, should be good now. Okay, so we did get these lows. We got higher lows, so we're still holding. We got relative higher highs, not higher than these highs, but higher than these highs. And the summary is now we're starting to. All right, we're starting. I'm looking for things in a very tight area. All right, so I need that expansion or that grab, that manipulation or that expansion. If that doesn't present an opportunity, then we can be done for the day. Okay. Again, guys, make sure to like the video on YouTube. Make sure to subscribe. Let's get the likes up on YouTube. How many likes do we have? Let me check. 30 likes. Not 30. 50 likes is the threshold. 50 likes is the threshold for the giveaway. We're at 18, so let's get to. We still have time. All right, 50 likes. I'll be giving away the course. Yeah, so no longer in the position. Once it came to POC, took profit once and took profit again. And you can also see my average fill on the Google Meets now as well. That's been the theme for the past, I would say, 3 to 7 days, maybe even 10 trading days. Right? Runners just keep running. Right? Runners keep running. All right, but don't let that make you change something about your trading. All right, it's just a matter of, okay, maybe letting a runner go, that's fine. But if you're still having something to take, if you still are taking advantage of the chunk of the move, okay, don't let that make you hold longer and discount your profits. It's just mind games. All right, it's just mind games. Let's see if we get a nice pushback to yearly upside breaker. Nice rejection here, rejection here, rejection here, rejection here. So this is not just because there's resistance here. Okay, this is not because this is a key level for us. All right. 28%. Beautiful job on holding that, Gary. Now just imagine everyone that got trapped above this break. All right. Market shows some signs of life. It expands. If you caught that, great. Where's your TP? Right in that zone. If you don't TP because you previously took a trade and you TP'd and they continued to go, market says thank you very much. All right, so safe bet is always have something to show for it, guys. If you do this thousands and thousands and thousands of times, all right, you'll be in good position if you're taking profits. Done for my cash account. Need to work with my prop firm account. Yesterday was down 500. 3 trades back to 400. Nice job of working your way back out. I don't know if you guys heard the announcement that prop firms are being banned, or certain prop firms are being banned in certain countries, especially Saudi, UAE, Dubai, right? I don't know if you guys heard that news, because maybe for tax purposes, a lot of people are moving to Dubai, moving to tax-friendly places, and the prop firms and the CME. Some say it's the CME cracking down on prop firms. All right. So what in 2025? There was one prediction that I did make, if you recall. All right. The prediction is options trading is going to get a resurgence. A lot of the people that went to the prop firms have experience in options. Right, but they just couldn't do it. They just couldn't figure it out all the way through. And they would jump to the prop firm space. All right, the prop firm space itself is 1 or 2 rule changes away from disappearing. So I'm not saying it's going to disappear overnight, but it's 1 or 2 things away from disappearing. Right? So when there's more pressure being put on that industry, there's going to be a massive amount of traders that need to go back to options trading, or just futures trading with a cash account. All right, Webull offers futures as well, guys. So if you are leveraging those prop firms accounts, continue to milk it, continue to take advantage of it. All right, but don't play the game of trying to gamble and make money, because you're going to eventually lose. You're going to be in the hole. And you could do significantly better if you take that same amount of capital you're putting into the prop firms into an account and day trade 1 DTEs, 2-3 points out the money, or 0 DTEs if you have the skill every single day. Granted, you're not going to have a 50K, but the 50K is an illusion. Okay. Webull said I'm out of the country, can't trade. Interesting. So maybe go over to IBKR. IBKR trade station might allow you to do it. I know definitely IBKR will allow you to do it. IBKR is publicly traded. interactive brokers, that is. Robinhood, again, if Robinhood is your preferred way, that's fine, right? So I'm not one of those guys who's like, hey, you know what, Robinhood. So if you know how to trade, the platform is just, you just getting used to it. If you understand the mechanics, if you can get in and out of the position fairly quickly, you're trading the same thing, right? Yeah, Robinhood does have its issues, right? It's a little bit slower. It's less. It's more for like beginners and people getting started. So they're trying to add legend and all sorts of different things. But even if Robinhood is the only option you have, you still can make it work. Right? You just need a vehicle. You just need a vehicle. You just need a vehicle. Anyone still knows puts? Okay, make sure to like the video, guys. Let's get the likes up. Any questions, put your questions in the chat. We had a nice drop, and now we're just hanging out, chopping around for this shift. We're a few minutes away from the next shift. We're inside on this candle here. Right, first shift slows, first shift highs, inside. So there's actually consolidation that we're seeing. This is resistance until proven otherwise because there's a key level. All right, and our prior interaction with that level. So that's exactly why I took the rejection here, followed by the alignment with the environmental conditions. From an ex-banker, comment in the chat from Jimmy. If you want this to be your profession, then use IBKR easily. Best fill when trading options. Yeah, IBKR is a good. You can rest assured it's legit. They're publicly traded. Of course, Robinhood is publicly traded. Webull is publicly traded. But it's good to have multiple brokerage accounts. It's good to have multiple and use those brokerage accounts for different things. So I have one account for scalping, I have one account, of course, long term. I have one account maybe for swings, actual swings that you're going to actually hold and not really pay attention to and babysit. All right. Now the 5 minute, the dumping continues as soon as we saw this shooter. So this wasn't just a shooter by itself. There was a level, okay? On top of there being a level, we had prior history in this area. Okay, so 3 things. 1, key level. 2, prior history, resistance. 3, price action combination. 4, that's you can't view through here. Okay, environmental conditions. That's what went into this start at the downside. All right, so you can make that assessment in a matter of under a minute. The longer you do this, at the beginning, it's going to take you a lot. All right, so it's going to take you some time to maybe your eyeballs are moving around. All right, but eventually, guys, if you train your eyes, if you do this for long enough, and you have your setup that's easy for you to navigate, then you can take advantage. you can take advantage. So those puts, we got them at 92 cents. They're at 132. So about $30, $30 to $40 per contract. Just shy of $40 per contract. And now this becomes first shift highs. Second shift highs, I should say. Let me move this. We already know what could take place there. Anyone familiar with SSH? In IT land, on my computer, folks? SSH. And you'll know the acronym for SSH. Put in the comment. I see your hands up, Najandra. I'm assuming you know what SSH is. Put in the comment. Okay, so those puts are starting to rock and roll. Yep. So for the folks who use command prompt, you guys are very familiar with SSH. So the great question, Lynn. I have so the type of levels that I have. Okay, let's pay attention to SPY here. I have two types of levels, and this terminology comes from, of course, my background in computer networking. So there's some levels that are static, and some levels that are dynamic. Okay, so we're going to say static levels. Static levels are the levels that we put on our chart every day. They don't change. Okay, we put it. Okay, and the dynamic levels, they change. So they come in hourly breaker, session high, session low. So dynamic levels are coming throughout the day. 50% retraces for maybe a second leg lower, second leg higher, whatever the leg, whichever direction the leg is going. So all of the daily 50% retrace, TOG, BOG, daily upside breaker, weekly upside breaker, weekly 50% retrace, those are all static. Those don't move. The only time the 50% retrace of the daily moves is the next day. On the other hand, the dynamic levels, they change shift to shift. First shift high, second shift high. Maybe we identify an area where there's a key level forming between two shift lows and two shift highs. Maybe we got a 50% retrace after first initial leg. Say we get a nice little drop, right? Once we get that nice little drop, we get a nice little pop. All right, when we get that pop, we throw the fib on to measure that leg. Right, this is in my the way I view it. This is not this is dynamic. All right, so we're looking for the levels throughout the day. We're creating the levels as we're getting the levels. These ones, static levels, don't change. So the weekly levels are there for the week. Daily levels change every day, but they don't change intraday. Monthly levels, okay, change at the beginning of the month. They stay the same. So the monthly upside breaker, monthly downside breaker, monthly upside target, monthly downside target, monthly 50% retrace, that's static. That's not changing for February until we get March's candle. So that's how I would distinguish the two. And what a sell-off, guys. Okay, but for some reason the contracts we're getting just continue to run. Okay, look at this. So this first shift low FSL here. Okay, this is dynamic level because we identified it intraday. Because the reason why I do my levels like that, I came up with that convention, is because previously I found myself drawing too many things on the chart. Visually, I'm drawing these things, of course, visually. We do have an educational stream. I want to bring it to your attention. But I'm trying to keep my chart as clean as possible and only have the most significant things on the chart. I can't have everything there. When you have too many things on the chart, what you start getting is you start getting conflicting information. And if there's any conflict, right, your confidence goes down. Right, so it's almost, you have to have the most important levels. So to me, the most important levels, right, the static levels, okay, hold a higher ranking than the dynamic levels. If I had to choose, I'll go dynamic over static. But we don't have to choose, but we just have to give those levels, like again, a weekly open is a static level. Doesn't change. So that's gonna be on our chart for the rest of the week. Let me know if that makes sense. All right, the whole point is to avoid having too many levels. If you see a lot of traders, they have a lot of different things going on the chart. Again, if it works for you, it doesn't cause confusion, continue. Right? But the main thing is we have to understand we're trading the price. The price is what we're trading. All right, so if you notice the support and resistance levels that I do draw, outside of the major macro zones, they're related to the key levels. So because you're going to come to conclusion, I've come to conclusion, I don't get to choose what support and resistance is unless it's so clear and it's near a key level. Right, so trying to make it as objective as possible. Because if we start playing the game of trying to find support resistance, you're going to have 1,000 lines on your chart. And in real time, when you're taking into consideration data, price is moving, you have to make trading decisions, and you're at a level, you don't know if that's a previous support or previous resistance because you have so many lines. You don't know if it's a entry, line of entry. You don't know if it's a risk. You don't know if it's a target. So trying to make it as clear and as simple as possible. I'll only take the things you need. Once you have the things you need, you can start adding a couple of things you want. Right? You can even make the argument you're good with this, with what you need. All right. Okay, good. Secured shell. Yep, the Q just fell off a cliff. So this breakdown below 692.77. No interruptions on the 5. So if you're using that 5 minute further dated, we did get a couple of buy ups on the 5, but nothing significant enough. So this first shift low is kind of between that weekly open. That is a key level here. So you get into that territory. If it grabs first shift lows and it goes, that's fine. We do have second shift lows down here as well. So we've just been chopping around, and our ATR is starting to get tighter. All right, it was expanding, got a little tighter, and it's starting to expand a little bit here. We're still moving about 96 cents per 5 minute candle. Get overhead supply 695, but first need to base a lower liquidity sweep. I think we come test yesterday's lows first. I can see that if we test yesterday's lows, we get below it. That means we are going engulfing candle on the daily. The only levels you need are the monthly, weekly, daily, and wait for price. Absolutely. That's all you need. Say you had to chart real quickly. You only had a phone or a laptop. You don't have the luxury of looking at a bunch of different things. Right? If I'm in that scenario, if I'm in that case, I don't have 3 monitors in front of me. All right? I'll have those levels marked out, and I'll be ready to rock and roll. All right? I'll have those levels marked out. I'll be ready to rock and roll. So everything else from this point on, it just gives us more information to give us more confidence and conviction. Okay. It's officially 11:30, guys. I will do the end of stream poll. Now, yesterday, I believe we had an 80% performance by the team. I'll go back and review. Daily performance. Again, guys, we are still early in the week. If you hit your weekly goal, some of you did. All right. You can start playing defense early. All right. That doesn't mean be petrified to take a trade. Okay, we're always going to have to risk something. But if you hit that target early, okay, you can size down already. I'm just giving you the framework that you can use, but you can take that framework and customize it to your liking. Okay. And yesterday did do some profit give back a little bit. So I'm not looking to do that today. All right. If you're just joining us, we talked about the puts here. Market fell off a cliff, took the puts here again, falls off a cliff again. If we can get into that 689.43, 689.58, things can look interesting. These contracts are just gone, guys. All right. I mean, this late to mid-January till now, runners have been running. Okay. Runners have been running. All right, if you're done, just answer the poll question. Yesterday's performance team, I believe, was above 70%. So as a collective, guys, as an entire team. Where is it? Yeah, here, 73%. Okay, 73% of the team green. So this is in an industry where 90% of traders lose. All right, so you guys are doing a tremendous job. If you're getting stopped out, if you miss this trade, here that dropped the downside, don't be discouraged. Okay, don't let that build up, that pent up FOMO, and you try to replicate this some other time. All right, go back, review it, meaning go back and watch how things played out. Go back on YouTube, see how it played out, to see if you can spot some signs of that breakdown taking place early, so you can better position yourself next time. Is this going to be the only breakdown of this extent? No. There's going to be more of these. Is this going to take place every single day? No. Okay. Nice grab of those lows there. Question becomes, can we reclaim 50% retrace, 691.38? Can we reclaim that? If you're done for the day, be done, guys. YouTube, we're going to look to wrap up here shortly. Again, guys, if you're a first-time viewer, if you enjoyed the content, best thing to do is show up early. 9:30 a.m. is when the show kicks off. I try to provide as much value as possible, minute to minute. So I'd appreciate your subscription, appreciate your likes. Those do add up. It helps the video get more traction on the YouTube algorithm. I think we just got back in the good graces of YouTube. All right, and also you can take this information and apply it. All right, you can take this information and apply it. All of this is intended to put you in position to learn. All right, education, number one. Education is number one. If you prioritize your education, you commit yourself to the process, you'll fit right into our community. And the year's already rolling, guys. The year's already rolling. So, New Year's resolutions. All right, most people probably scrapped the resolution already. All right. That 2026 goals are quickly being thrown to the wayside. So make sure you continue to revisit your goals. Don't let them go. Hold on to them dearly. All right. Despite circumstance, situation, just hold on to it. It's not over yet. It's the first round. Oh, we just entered the second round of a 12-round fight. Like the old school boxing days, okay? 12-round fight. We just entered the second round. That's why I love that Mike Tyson quote, right? Everyone has a plan until they get punched in the face. So if you've been punched in the face in the first round, all right, it's part of the game. Stick with it. Stick with it. Stick with it. Probably diverging here. I would like it off of these key levels down here. If I can get that, great. We're starting to slow down. Yeah, I think I have to let the runners do more work. I think I have to let the runners do more of the heavy lifting rather than trying to look for something else. All right, take majority as usual. Let the runners do the heavy lifting. So we'll probably start doing that middle of February. Because at the beginning of the February, beginning of the month, you're just building a cushion. Okay, you're building a cushion. Okay, it's cushion building. Nice retrace reject. We continue to sell off here. So 100% of the team is in green so far. George getting, I ready to watch all those people getting over 25%. I'm good with my my 15, 20%, 10%, but just giving the runners a little more room to breathe. Because we are right. Right? We are right. But you want to be very right. When you're very right, that's what the runners are there for. You never know when the Trump candle comes in. And it can go either way. So you can be in calls and then a massive candle can come in and that goes the opposite way. All right. So if you do this for long enough, right, you'll start realizing taking profits is the most important part of the game. Outside of managing risk, right? Once you can get that down, right, taking profits and knowing when to take profits is very, very important. All right, you don't have to be the expert at taking profits at the very, very top or the very, very bottom, but you need to be an expert in having something to show for your work. If you have a system that continuously feeds you higher probability setups, right? You're just looking to improve with runners, so on and so forth. But I make the argument, if you have a well-refined system, you don't need the massive home runs. Right? They're just icing on the cake. They're going to help, of course. And remember what we said last year, right? Those outlier wins cover the outlier losses. So the majority of your wins are in between. How well do you manage your risk? On most trades, where do you cut it? And how often do you take profit on the winners? So outliers on both sides take care of themselves. So if you can say, hey, let me have less loss outliers, maybe you can start cushioning your profits as well that way as well. But I would say long term, that's the most sustainable way to go. Okay, because you don't want to be erratic. You don't want to be green one day, red the next day. Green the next day, red the next day. And by the end of the week, you're at break even. Because in my mind, the way I view it is I put all these hours in, and it's like I did nothing. Right? So you're going to have something to show for your work. All right, the primary objective is to leave with more than you came in with at the end of the week. Is that going to be guaranteed 52 times out of 52 times? Probably not. But if you follow your system thoroughly, manage risk accordingly, take profits where you need to, there's a good chance you will exit the week with more than you entered the week in a non-volatile fashion. Because the volatility, right, it really starts to, right, take chunks of your mental capital. These swings to the upside, swings to the downside, does a lot of emotional damage. Right, a lot of emotional damage. And especially if you're looking to do this to compensate yourself, you're going to have to treat it like a business. All right, and just look for things to adjust. Periodically, you'll struggle with different things from time to time. And it can be some things going on internally. It can be some things going on in your environment. You'll have to assess that. But even when you're going through that period, you still should be able to float. You still should be able to be afloat by repeatedly taking profits, cutting trades where you need to. I almost knocked out, right? And that's the important thing. And again, two different risk profiles as well. Okay. QQQ are at the last week's lows. Let's take a look at the Qs. You have Qs again, nice little pop there, back the upside. The Dow's now fallen off a cliff. If you take a look at the wave chart, guys, we have not seen anything on the 5. Okay. Like nothing, just all pure selling on the 5. All the buying does not flip the waves on the 5. So if you're waiting for legitimate signs of reversal on the 5, it's not there yet. So let's see what we can do with this grab of these lows. Maybe pyramid our way out of here. Inverse head and shoulder. Right. If not, we reject one more time and slide to the downside. Get one of these nice little peekaboo and drop in here. That'd be great. So those weekly buyers can start stepping in. Inside on the 5 here as well. Inside count on the 5. And we're trading below POC. We're trading below VWAP. We're trading below all the primary indicators that suggest that we are bearish. And potentially setting up for another flag here. All right, so chop hour. So last idea, nice little drop there. If you caught that, great job. Any questions, guys? Any questions? SoFi taking a hit. Let's take a look at SoFi. SoFi is probably getting a double whammy. It did report earnings. It slid to the downside. Now PayPal. Maybe it's the effects of PayPal for all the fintech names. SoFi. Okay, SoFi is getting close to that 20. SoFi. A slice right through 25. That doesn't look good. I usually like SoFi at 25. You can see that somewhat of a head and shoulder there. If we can come into 20. There can be something there between that 20 and these highs from 2025. From January 2025, so about a year ago. And coming to these highs. And it looks very similar to what took place here, if you guys kind of see, all right? You guys can kind of see the profile here. Take a snapshot of this, all right? Take a snapshot of this. So end of year to beginning of the year, SoFi slid from 24 to 25 and recovered end of year, start to recover, hit those bottoms in April and start to push back. End of year 24, beginning of 25, we saw that slide and correction. If you take a snapshot of that, it kind of might be a stretch. Kind of looks like what's going on here. All right. So at this particular time on SoFi, we did see a pullback of 56%, 53%. Currently, SoFi is down from the highs. Again, this is a rough estimate. 33%. So for us to see a pullback or a correction or a crash, you can consider that a crash above 30-40%, right? Nothing too dramatic though. Okay. We can see if it gets back to 53%. Look where it lands. It lands all the way. Let's just say 50%. So it lands all the way back into these highs here. So SoFi, there's probably going to be a cohort of participants that want to engage here. All right, so that's going to be that between that 45 to 50% territory. That matches the sell-off we did see here. All right, so before we do get there, of course, we have a lot of things to take place. It's like, are there enough buyers to step up off that 20? Does that selling pressure lead us into that 20? Do buyers want to pick it back up? If they do, retest of that monthly downside break over the entire month. We play the game of reclaims. We have to reclaim a bunch of things. Right? If those buyers don't show up, there's not enough buying, enough demand there. We just dip into this, and there's not enough demand to lift us up and reclaim 20. Right? Then that sell-off is going to start creeping into being greater than the one that we saw here. From November 2024 all the way, of course, this was fueled by a catalyst as well, which was the tariffs. All right. So SoFi is setting up. If you're long SoFi, if you like it fundamentally, there's nothing to be too concerned about. Especially if it's long term, there's nothing to be concerned about. If you have good entries, if you've been dollar cost averaging or good entries, you maybe are giving back some profit. If you've been building a case, if you've been putting money into SoFi since from before 2024, all right, the highest price you paid was $8. So you're still up over 100%. So again, the most important thing is how much you paid. What's your entry? All right. That's the most important thing in basically any asset class. All right, what is that? How much did you pay for it? And then where is that payment in relation to market price? So for the ones who entered in 25, maybe they're seeing some negative in their position. For the ones who entered in 24, 23, all right, maybe there's an ad. All right, the fundamentals line up. Maybe there's another second leg at the position. All right, so it just really depends on nice little breakdown there. Retrace, reject off weekly 50% retrace. So look at this, guys. We retrace, rejected off this daily 50 and weekly 50. Interesting. Nice flag break on the 5 there. Slide to the downside. So it really depends how long you've been in SoFi for. Okay, so anyone before 2024, you should be fine. Maybe you're considering a re-entry. Add more to your position. Anyone who entered late 25, early 26, right? If there's a fundamental case, you believe in the fundamentals, you're just sitting a little bit of drawdown. If it's long term, it shouldn't be too concerning, but you're just in a little bit of drawdown. And that happens with individual stocks. All right, if you can try to get your entry, if you can get your average entry, okay, just think of it like this. It's a very simple calculation I'd like to use. Okay, let's do this. You don't even have to do too much technicals. If you have a good idea of the fundamentals of a company, what I like to do, just fundamentally, without doing any elaborate calculations, okay, is take the trailing 52-week high. Okay, very simple. Trailing 52-week high, trailing 52-week low. Very simple. Divided by 2. 52-week high, say 52-week high in this case is 100. 100. All right, just for math. 52-week low is 50. All right, just to give myself, if I just off the top, if I know if I have a good entry or not. All right, and now I'm looking to enter. Okay, so the 50%, you see how I love 50%, guys. Anything divided by 2, 50%, that is, look into that number. It's a magical number. All right, that's going to be 75. Okay, so 75. So my line of thinking is if I'm looking to enter this asset, it's trading at 100. All right, I'm looking to hold it for 3 to 5 years. I'm not going to buy it at 100. I needed to get it close to that 75, 70 territory. Okay? Because if there's a pullback, at least I can sit there. I'm not sitting to too much drawdown. If my entry is here, one little drop, I'm down. If my entry is here, it starts to pop, I'm up. But if it drops lower, okay, that can present another case for me to add another layer to position. I can reassess fundamentally. If my entry's at the very top, when it gets here, more than likely you can panic sell. And if it goes a little leg lower, you can panic sell. All right, so there's a simple way. Okay, I want you to see, hey, you know what? Do I have a good entry? Do this calculation. Very simple. How close are you? Okay, are you above are you in the middle of that trailing 52-week high, 52-week low? Are you on the bottom end of it? Top end? That should give you a good idea. And of course, you want to match that up with the fundamentals, XYZ. All right, so that's a massive, massive gem. So take that easy way to do it. So if I'm looking at SPY, if SPY's at 2-week high, it's say 700, 52-week low is, just for number's sake, 600, right? I'm not going to make a long-term ad on SPY at 695. Right? I'll have to wait. All right, I'll have to wait. And nowadays, even Webull gives you 3%, 4% for your cash. So you're better off. A lot of these brokers give you 3-4% for your cash. You're better off sitting on the sideline collecting your 3-4% rather than deploying your capital early and being in drawdown. And then when that number hits, okay, you were waiting, right? Your capital was sitting, was working. It wasn't working at that rate that you would like it to work, but it was working nonetheless, risk-free. And when it's time to deploy, okay, boom, you deploy. Okay, so hopefully that helps some of you. $9. So there you go. So Turbo is not concerned, right? Matter of fact, he may be considering to add some more. If he likes the fundamentals after doing due diligence, that's the power of entry, right? So most of the smart traders, their entry price, all right, or the smart investors, their entry price is well below that trailing 52-week range that I just explained. You know where retail's entries are? Right? Smart retail's entries at the bottom of that top quadrant. Okay? Dumb retail is at the very top because they haven't learned yet. So there's segmentation between retail traders now, where we were called dumb money before. Now within the retail space, okay, there's smart retail and dumb retail. All right, this is just the way I view it, because there's people who start off at retail, right, like myself, and over the years start understanding and start playing the game the right way. So you can actually start taking advantage of the traditional retail traps, or you can avoid those traps. And one of the traps is where you buy. We saw what took place in gold, guys. We saw what took place in gold. And the ones who get hurt are the ones who are late to the party. And gold, if you're buying above 5,000, all right, you're extremely late. Especially if it's for a trade, because now it's basically you're buying at all-time highs and made back-to-back all-time highs. Where is that 52-week low? All right, you can use all sorts of different measures, but those are things you want to consider before you hit the buy button. And there are names that are discounted. There are names right now that are discounted. Right, so you have to dig into the charts, look for those opportunities, because you're literally treating it like an investment. That's exactly what it is, right? You're looking for these companies where you can deploy your capital and they work for you. Some of them pay dividends, some of them don't, and you can enjoy the appreciation to the upside. You're a shareholder. So finding opportunities to capitalize off of in the long term, right? You don't have to be looking every single second, every single day, but you should be, especially if you love the game, you should be in the charts at least once a week looking for those opportunities for the bigger picture. Okay. All right. And we'll continue to sell off here. Chop, 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 sell off, chop, 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 sell off. That trend is very, very strong to the downside. If we're fighting the trend today might not be the day to fight the trend. Matter of just let the price come into that territory and take that rejection. The VIX is above 17. We're on the verge of going 3 down and golfing, guys. This would be a huge, 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 big deal as the Bears regain control on the daily. As far as that daily candle is concerned, let me just bring it to your attention real quick. Let's zoom out to the daily. Let's hide some of these drawings. Hide all. And then boom. So here's a daily candle. All right, we went inside. We became directional. We took out these candles' highs and made those equal highs, and now we're on our way to fall below the previous candle's lows. Okay, look at the QQQ. QQQ actually had an engulfer. So QQQ on the daily, right, very rare sequence. All right, I had a bullish engulfing yesterday. All right, take a look at it on your chart. Followed by a bearish engulfing today. And this bullish engulfing is from that candle from the previous day, which was inside. Wow. Okay. This is the highest form of manipulation. This is like Hall of Fame level manipulation. So what they do what they do to Thursday's candle is this. Okay, they pump it. Okay. Friday's candle. They pump it on Friday. They pump it above Friday's highs. They actually open up below Friday's lows. All right. And pump it above Friday's highs and close. Engulfing. Today, what do? They open it up near Monday's highs. They wick above it, trap all those buyers, and then dump it to the floor. This is a very rare sequence. So this is a 1, 3, 3. 1, 3 up, 3 down. 1, 3, 3. So if you zoom into this structurally, what you're going to see is this. That day, and you're going to see a sweep like this, and you're going to see this. Okay, what does that translate to? That translates to this. Broadening formation. And where are the points of exhaustion? At the bottom of the formation. So they probably want to drive it to those lows, hit exhaustion, course correct, fuel up, and go back to those highs. All right, so that's what happened on the QQQ. All right, very manipulative. Again, that's why price action is so important. You should be able to get a read on what's going on. All right, so the Qs trapped a lot of buyers today on that continuation at the upside. All right, we went engulfing yesterday. We broke above those highs. Peekaboo, trap. All right, they peek above those highs. Nice little peekaboo. And then they pull a Houdini and they disappear. Okay, the profits disappear. All right, so very interesting how the Qs are playing out. SPY continues to dump here on the 5. Nice little breakdown off that wave. Off of that wave. Again, guys, we'll wrap up the stream here in about 30 minutes or so. 12:30, we'll wrap it up. Hopefully you guys found value. Join our community, take advantage of the trial. All right, we do have a trial for the month of February. To access all the tools and resources, take advantage. Code is on the screen. If you're looking to capitalize off the opportunities and get properly educated, all the course materials also on the screen. Take advantage. Everything is available. All right, so everything is in depth, and I try to give you as much value at each of these touch points, whether it's community, whether it's the courses, whether it's the one-on-ones. Right, you're going to gain a lot of value. What a drop there. You saw that drop? Look at that. Selling pressure too heavy. What a drop. Trend traders are loving this. For the ones who took the drop earlier, if you go and take a look at the contracts you had, right, that's going to illustrate to you the power of options. So we had that nice little break, Once it broke, rejected, sliding, and we're on the verge, guys, to get to 690. Wow. Wow, 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 wow. And SPY continues to sell off. Qs continue to sell off. Let's see if the synchronized selling. The Dow continues to sell off. IW continues to sell off. So synchronized selling here. This might be government shutdown related. Semiconductors taking a hit. Who knows at this point? There's so many headlines swirling around. Right, there's so many things to take into account. So many things. Take a look at the news here. Okay, bankers tee up the busiest IPO week. On top of that, we have AMD earnings. So semiconductors will be on watch. Okay. Trump prioritized crypto, Wall Street banks. Okay. CTC chairman, digital assets. Okay. Walmart joins the 1 trillion club. So by the time it makes that move, it becomes headline news. By the time it makes the move, it becomes headline news. Stock market today has to be about fall. Okay. Mitch McConnell. German 30-year bond yield rise 3.5%. Okay. Okay. So interested to see how gold is holding up. Okay. So this can make as we're dropping, guys, this can make a case for gold. Folks who had it on that dip. All right. You'll thank yourself in 3 to 5 years. Folks who had it in the April dip, you'll thank yourself. You're thanking yourself right now. All right. We're in between two zones. We are in between two zones. Just 3 trades today. If you're just joining us, we took the puts here. Nice double-digit gain. Stopped out originally on the puts here and then caught it for 48. Stopped out 18. And caught it for 48 after re-engagement. Fairly straightforward day. Fairly straightforward day here. Fairly straightforward day. Any questions, guys? Any questions on YouTube? Strikers, any questions? Most of you are done. Tremendous job as well. Tremendous job today. All right. Looks like, it's up to the poll. 100% of the people are green today. If you're, again, the biggest thing now is a test of your discipline. All right. Test of your discipline. If you're done, be done. Tomorrow is Wednesday. Government shutdown is in full effect. Let's look ahead a little bit. So now you can see government shutdown may impact the shutdown tentative data, okay, or cancellations. Today we're supposed to have JOLTS. JOLTS no longer there. ADP, non-farm employment change, we're going to get that. ADP is private, okay? ADP is from ADP, the company ADP. All right. I believe ADP is automatic data processing. All right. And of course, ISM, unless I'm wrong. I think it was Lynn who corrected me last time. You might have to correct me once again. ISM, that's probably going to be survey-based. Unemployment claims, government shutdown, we're not going to get that. consumer sentiment that's coming from University of Michigan. That's going to be available. So now the government shutdown is having a real impact. All right, so next week, it's going to impact. It looks like JOLT was moved to next week, tentative, and retail sales as well. That's going to be impacted. After next week, we have CPI. So the question becomes, can the government shutdown last until February 11th? Okay, currently we're on the 3rd. All right, we're on the 3rd right now. Okay, so can the government shutdown last 8 days? If it can last 8 days, that means the CPI data is going to be pushed back. Okay, so 8 days is the magic number. So let's take a look at poly market. All right, government shutdown. Numbers are moving. Okay, so this morning when we checked, it was what? 18%. Or 18%. So there's a 3% chance we go 10 days. But there's 37% chance that we go 5 days and a 6% chance we go 16 days. So we're at least going to go 6 days. That magic number for CPI is 8 days. So it's right on the edge. Another drop here. You can see the level 2 time and sale speeding up. Look at that. The bottom fell out. We're officially 3 down, engulfing on SPY as well. If there's no bars on that weekly, the bears are in full control. Was that candle from yesterday? The matrix glitch candle, a sign? Was it a sign? Another drop to the downside. My goodness, no buyers. No, I didn't stop sharing it. I just forgot to turn it on. But the people on Discord can see it. Blood, sweat, and tears. So the people in the Discord that have access to the Google Meets, and you have access to this chart, you have another chart to the side, and you have access to the level 2 time and sale, and my average fill when I'm in a position. What a drop. What a drop. So is this it? Do buyers pick this thing back up? Do we get a retrace reject? Let's assess the environmental conditions, engulfing to the downside. We are directional on the daily. That daily candle, let's go back to it real quick. The Qs, good night. The Qs just went good night. Again, what's encouraging is gold and crude are holding up. Crude has been the story this week. All right, last week it pushed into 65, 66-ish, and now it's starting to see crude push. Bitcoin, okay, Bitcoin's in trouble. All right. Again, same thing with Bitcoin. Can someone put in the chat what the 52-week high, 52-week low of Bitcoin is? All right. What's the 52-week high, 52-week low of Bitcoin? 52-week high, 52-week low of Bitcoin. Look it up. Okay, 52-week high is 126,000. 52-week low is 74,000. Okay, so now we are trading right at that 74,000. So we are well near that 50% retrace. So this is a major sell-off. Okay, so that 100,000 is that magic number. 100,000 on Bitcoin is that magic number. 100,337. All right. So we know a majority of retail has their entries, right, above that above that top quadrant. Even the people that have their entries near the equilibrium of the trailing 52-week high, 52-week low are at 100,000. They're underwater as well. And now we are on the verge. Okay, we did dip below 74,000. So there's a new 52-week low that we just put in. Okay, so we did put a new 52-week low. Okay, so Bitcoin, this is a crypto winner. Okay. That's an aggressive sell-off on Bitcoin. So a lot of people, okay, are underwater on Bitcoin. Again, if you believe in it, if you believe in the thesis, whatever asset class you do invest in, you sit through it. If you don't, you get shaken out, and the thing you were looking for ends up taking place 3 to 5 years from now, and you're punching the air. All right, so if you still are trusting the thesis, this goes to anything else as well. All right, if this thesis still looks good to you, all right, stick to your guns. If the thesis has changed and something fundamentally has shifted, and you didn't take this initial slide to the downside into account, right, maybe it's time for you to part ways. And it's going to be hard to part ways. Right, but it's never easy to say goodbye, okay? Saying goodbye is not easy by any sense. So you get that reclaim. So you get that reclaim again. If you're looking for, if you're a bounce trader, you're looking for all sorts of things. Every bounce is getting faded if you're not taking profit. So you get a nice little reclaim. This is a solo trip by SPY. If you're a bear, you're looking for retrace rejects, possibly off 690. If you're a bull, you're looking for reclaim. So a nice reclaim of this territory. Okay. I want to buy ETH at 1,700. What price is ETH currently? What price is ETH currently? We'll take a look at it. Nice reclaim there. So is this now piece by piece? Is this reclaim enough to get us back above 690? Because guess what? There are some bears that want to take this drop again. That dead cat bounce. Wow. Things are heating up, guys. We're still inside on the 5. Still inside on the 5 across all the indexes. We found a nice landing spot at that 689. So it looks like we're rejecting off of this. If we fall back below it, dead cat bounce. But this, look at this candle. This candle, right? Very similar. We saw this candle a few times. This massive sell candle. This candle, guys, is close to $2, $1.73. So this is close to 10 minutes of action in 1 minute. And if you're short, if you're going long on this candle, it's very hard to get filled. So reclaim, failed reclaim, continues to slide. Keep in mind, new 5-minute candle here. New 5-minute candle here. New 5-minute candle. Wow, I got puts there on fraud firm and hit 7 profit target. Beautiful job. Done for the day. for both accounts. Beautiful job, Gary. Could have made more is a great problem to have, 100%, Sancho. Right? Out of all the problems, I'm not sure if you guys heard the sayings before, right? But it's a very profound saying, and it puts things into perspective. Well, you think you have problems, but just imagine if you get everyone's problems, and you put all the problems, everyone puts their problems on the table, right? 9 times out of 10, you'll pick up your problems, and you'd say, you know what? I don't want anyone else's problems. So in this case, could have made more is a great problem to have. I couldn't agree more. I've been in the meeting due to class studying, but I'm hooking and jabbing still, green on the year, and working on my risk management. Beautiful job. Yeah, if you're passively watching the charts, okay, maybe you have to go a little bit further out. Okay, if you're not actively watching the charts, 0DT might not be a recipe, right? But the ideas that are provided are applicable for all contracts. If price is going to move, all the contracts are going to move. The degree to which they move, differ, but they're going to all move. All right. So great job on managing that green. On the year, tremendous job. So if you're green up on the year, okay, so you're green in January, and you're green in February. No one trade. Okay, no one trade, no singular trade in February. Okay, should evaporate all of your gains from January and put you back in the red. That's a risk management issue. No one trade. Can there be a series of trades that can start impacting if things just don't go your way? Your profits from January into February, say you have a red month in February, yes, right? But your primary focus, February, think of it like this. The first half of February, all right, you're just stacking the wins. Just stack, 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 stack. You're not concerned with the whole month yet. All right? That's like the trick that our runners use, okay? When you're running long distance, or if you're trying to run like 3, 4, 5 miles, right? You're just trying to run to that next landmark. Same thing. So the entire month of February boils down to 1 week. You're taking it week by week, and then within the week, day by day, shift by shift. If you can stack 2 weeks together, that means half the month is done. So that means worst case scenario, all right, if half the month is done for February and you're green, during the second half of the month, if you're red, okay, there shouldn't be a case where things happen, of course, right? There shouldn't be a case where you give back January. Right? If you happen to be red on the second half of February, all right, maybe you start digging into the profits here. So you want to create separation, okay, away. Build a cushion, build a cushion, build a cushion. Because what happens with most traders is they're green. All right, they're green 1 month, 2 months, 3 months. All right, and then 2 or 3 days, 1 month, they're red. They're in the red on this particular month for some reason. And then they give back, when that red month comes, they give back all of this. Okay? They give back all of that. So if this red month comes, right, worst case scenario, right, if you have proper risk management, you give back half or maybe the whole of this entire month. But you cannot give back everything. Right? Even if it's like even if you're starting to give back some of this month's profit, just take the entire month off. Take the rest of the time off and reassess. Because if you start spinning out of control, This red is going to eliminate all this. And now, guess what? 3 months of discipline eliminated because of this. Right? So always creating that separation. And the only way to mitigate that, red months can come, red weeks can come, red days can come, is when on those days where you're red, on those months you're red, on those weeks you might be red, trying to minimize the damage. Because you're going to have to clean it up sometime in the future. So if you make a big mess, okay, then it's going to be very difficult to clean it up. 99 problems. Could have made more in one. All right, so we'll look to wrap it up here in a couple of minutes, guys. We're starting to see a nice little push. I did want to take this reclaim. Action is not as clean as I want. There's a massive sell block there. Okay, we're rejecting out that 690. Do we have another leg to the downside here? Another leg to the downside. Another leg. Another breakdown brewing. We shall see. 3 minutes and we'll wrap up the stream on YouTube, guys. We'll keep it running for a few more minutes on Google Meets as well. If you have any questions, anything you want to review. Other than that, we're going to look to wrap up here. It was a beautiful day. Lots of great opportunities to capitalize off of. I'm glad that you guys didn't try to chase. You took your trades. You wrapped it up. You called it a day. Very, very important to exercise that discipline after a massive green day. So it did peekaboo above it. Came back to 690. We met that 690 wall. Wall of sellers await. And now we're sliding back to downside. Okay. Clear downtrend. As clear as can be. That 5-minute first and second wave are very strong. Engulfing candle or shooter off that 5-minute wave has been the recipe for success. The Dow went 3 down. IW went 3 down. The Qs are poised to go 3 down. Okay. And what a drop. What a drop. Let's get the likes up, guys. Make sure to like the video before we wrap up. What a drop. That thing looks like it wants to go to those lows. What a drop. On that note, we'll wrap it up here, guys. Thank you for tuning in. If you found value from the stream, subscribe, like. If you're interested in joining our community, there's multiple ways to do so. Go to smartactiontrade.com, smartactiontrade.com, or you can go to our Whoop store page. There's multiple ways. We got the different plans you can take advantage of. Right, we have our Striker Apex plan that offers all the features. You can join, use the code, the trial 30 code. You get a 5-day trial. You can also use the Striker Lite plan, which includes all of the tools and resources, but not the live stream. Right? You can use a live stream on, you get the live stream for free on YouTube, and then use this to get the game plan, to get access to videos, so on and so forth. If you want any of the courses, that's available. The bundle is there. The Against Our Day Trading course is there. If you want to book a coaching call, that's available. And of course, if you want to join the free tier Discord, that's available as well. Free tier Discord, I'm very close to just closing it out. The risk reward is not worth it. We're getting a lot of spammers jumping in there, self-promoting. That's not what it's intended for. That's going to be the difference, right? So if I do make all the communities free, there's going to be some malicious actors, spammers. So again, these are the ways to join the community. I'll drop the link in on YouTube. Take advantage of the codes. Once the spots fill up, they're full. Once it's full, you're going to have to wait until the next month. So when you do join, especially the Apex Striker, delay-free, ad-free stream, you don't have to worry about any delays. You can ask questions anytime. At the same time, you have access to the pre-market prep stream and the extended stream as well. So we extend for a few more minutes after the close to take any questions to see if there's any ideas. And that's what you get access to, all right? So again, wherever you are, take advantage, long-time viewers especially. The special for February is here. Drop the link here. All right, any questions on YouTube? Again, another drop here, all right? Brought to you by 690. Can you play the reclaim? You can scalp the reclaim, but where's your target? 690. In the face of that massive sell block inefficiency, in the face of that massive waves, and we'll continue to dump, guys. This is turning into a pretty significant dump. Intraday, we made a move. We essentially evaporated. Essentially, the Monday's gains, all right, basically evaporated. And look at that resistance, okay? Monday's gains evaporated. We have that daily downside target 2, or target 1 here. All right, that's it. We already swept the lows from prior day. Minimal response. All right, nice retrace reject. If we continue to dump, that leads us into the lows of this massive dump that we did see. Remember this day when we dumped? That was on a... Guys, this is starting to turn into a pattern. Okay, it's very... The pattern is very, very straightforward the more you look at it. All right, that might be the thing to do until proven otherwise. Tuesday, look, Monday we make a move, and Tuesday's turnaround Tuesday. We give back those gains. Right, you can see Tuesday we dumped. Right, where's Tuesday? No, Tuesday we pumped. All right, so I take that back. So I thought this was Tuesday for a second. But nonetheless, we did dump, and we're dumping again. So when you kind of zoom out, you can kind of see we're starting to become range bound. All right, we're starting to become a little range bound here. Okay, we have this range here, bunch of gaps that need to be filled. Okay, and then we have this range down here. All right, we're not there yet, so we're basically range bound. We're overextended. See if buyers want to pick this up late day, or if it returns to a complete sell day. It's complete selling. Wow. Now we're going to daily downside target, Monday 50% retrace. Okay. On that note, guys, we'll wrap it up here. Thank you for tuning in. Smash the like button, subscribe. We'll see you guys tomorrow, same time, 9:30. If you're going to join us for our pre-market prep stream, where we go over all the ideas, game plan, and potential individual names, join the Discord. Use the code TRIAL30. I'll see you guys tomorrow. Stay safe, and God bless each one of you.
CEO, right?
Yeah, it's just being displayed out in the open for all of us to hear the back and forth. But NVIDIA CEO Jensen Huang is really pushing back hard on reports of tension with OpenAI, telling Jim Cramer just today the controversy is, quote, complete nonsense.
No, there's no controversy at all. It's complete nonsense. We love working with OpenAI. We are incredibly honored and delighted to be able to invest in their next round. And so we're privileged that they're inviting us to invest for each one of their rounds. There's, of course, an IPO in the future, and we love participating in that as well. And so this is a fantastic company.
For more on that interview, check out Mad Money tonight. But the clarification comes after several reports suggested NVIDIA and OpenAI were at odds. But what's actually happening is two separate deals are playing out on different timelines. First, NVIDIA's up to, and I use up to because that's what they said, $100 billion in a phased infrastructure investment, which was announced in September on our airways. The deal calls for deploying 10 gigawatts of data center capacity, with the first gigawatt targeted for the second half of 2026. The Wall Street Journal reported the deal has stalled, but the original timeline, according to the press releases, hasn't actually passed. And you can see it's still on OpenAI's website. Separately, NVIDIA is participating in OpenAI's current funding round, a straightforward equity investment that's actually moving forward. NVIDIA's CEO confirmed that even in that interview with Jim Cramer. Reuters, to your point, Kelly, reported on Monday that OpenAI has been shopping for chip alternatives for inference workloads, but OpenAI already uses other chip alternatives, AMD, Broadcom, Cerebras, for even AWS for specific use cases alongside NVIDIA. But OpenAI's head of infrastructure, Sachin Katti, posted that NVIDIA, quote, is our most important partner for both training and inference, and our entire compute fleet runs on NVIDIA GPUs. Sounds like the relationship is still ongoing. So OpenAI is diversifying its chip suppliers, but NVIDIA remains the platform.
Just to back up for the 30,000-foot view here, it's all a bit ironic that we're focusing on the fight between them. The whole point is they're like tied to each other, and the ship is going down. Like, not going down, I don't mean dramatic, but like, here comes Gemini. Gemini does not use NVIDIA chips. Google uses NVIDIA chips in the cloud. That's fine. Gemini does not. Gemini uses Broadcom, uses a different ecosystem. So the other two, now, if OpenAI is going to ditch NVIDIA and try to use, TPUs, that's fine. NVIDIA, meanwhile, I don't know, but I find that we're making a lot of the back and forth between them when really the whole story is that they together have to figure out what to do about the rise of Gemini.
Right, and so you can already see that happening in the markets. Those names that are exposed to OpenAI, let's say CoreWeave, NVIDIA, et cetera, and then those that are exposed to Gemini, there's quite a divergence. And why you've seen NVIDIA actually trend lower over the last 8 months since its all-time high just in October, $212. So yeah, I would definitely agree with you, Kelly. We're talking about these headlines. Does he like me? Does he not like me? No. You should really just be talking about which large language models are going to be moving forward with
2006 to 2021 United States Silver Eagle, the first ever U.S. silver dollar minted in 99.9% pure silver and is the best-selling coin in the world. These original and historic silver dollars have ceased production forever. That's right, they will never be minted again. For a limited time only, full pound bags of original U.S. government-struck silver dollars are being released to the public. That's right, you can own a full pound of original U.S. silver dollar coins featuring Lady Liberty and the heraldic eagle, never to be struck again. Guaranteed. Call now to secure original United States Silver Eagles by the pound. The first U.S. silver dollars ever to be struck in 99.9% pure silver. Plus, receive a free bonus, an American collector's pack valued at over $40 and free shipping with every order. Call 1-800-973-9741 now to secure your full pound bag of United States Silver Eagle coins before they are gone. That's 1-800-973-9741.
Tuesday, February 10th, join CNBC's first ever Digital Finance Forum, unlocking opportunities in the new blockchain economy. Request your invite at cnbcevents.com/digitalfinance.
Some mornings the road calls for more than just horsepower. It asks for intention, precision, the quiet confidence that doesn't need to announce itself. It's the details, how you carry the moment that sets the tone. This isn't just about looking sharp, it's about feeling ready. Crafted for motion, built with purpose, designed to perform from sunrise to last leg. Collars & Co. Presence starts here. Try it for yourself today at collarsandco.com.
Our sales are certainly going through the roof.
Are you for imprint certain?
Everybody loves space chickens. Don't they?
Certainty matters. So when you need the right high-quality promotional products, printed perfectly and guaranteed to arrive on time, that's the certainty of 4imprint. Wow your clients, nail your next event, or inspire your team by visiting 4imprint.com. 4imprint, for certain.
Welcome back as stocks are near session lows, and so are shares of NVIDIA, as we were just discussing, down 4% today. Let's talk to our next guest about that. Jeff Kilburg is CEO and founder of KKM Financial and a CNBC contributor. Jeff, we'll come to Tesla in a moment, some of the other big movers today, but on its face, what does this decline in NVIDIA tell you? Is it a big headwind for the rest of the market, and do you have a view on what's going to happen next?
Well, Kelly, I think we have to take a step back and realize about 5 hours ago we had new all-time highs, and the S&P 500 was about to make a new all-time high. So yes, it is a bit of a neck-snapping day, but this is deleveraging, this is de-risking. You're seeing the VIX move up about 3.5 points, so about a 20% move in the VIX. And I think there's a lot of inputs. I think we're still digesting the Fed meeting last week, the new appointment in Kevin Warsh. We're also looking at Iran tension. So there's a lot of inputs, but we are seeing this bigger, broader picture, Kelly. We've talked a lot on the exchange about this great rotation, this profit taking outside of tech, specifically in software. We're seeing great profit taking into some of these broader names. But I think it's what we've talked about.